Wait, what? This is a different Play the other one.
Ladies and gentlemen, sorry.
Play the other one.
We played the wrong
Play the other one.
countdown music.
Play the other one. Yeah, here we go. I like it.
All right.
It's ETN. It's Thursday, 30th of April, 2026. It was earnings call yesterday. Legora's just raised $50 million at an extension. There is a bunch of stuff going on. We love to see it. Leave outdated business banking behind with Airwallex. Go to airwallex.com, please. They gave us a nice McLaren car. It was lovely. Shall we run through, before we do the news, let's run through the guest lineup.
Yeah.
And
let me tell you a little bit about who we have on the show. Absolute stock docket as usual for you guys.
Indeed.
We've got Jarek Kutylowski,
huge
CEO and founder of DeepL. They brought an exciting update. It actually came out last week, but we're speaking to Jarek today.
Bit late to that
This
news.
is about their new launch, which is basically centered around a new sort of model within AI, essentially. They're pioneering voice to voice, essentially. So this is going to be super interesting for them. Why is this like a new interesting development? Why language is becoming a critical bottleneck in global businesses? So that's going to be great. And then followed after Jarek, we've got Antoni, the new Thiel fellow, co-founder of Derpetual. He is the new one of two European Thiel fellows. He comes from Poland. We're going to be digging into what is the fellowship like? What is Derpetual? He'll be breaking that down. After that, we've got Dr. Andre Retterath, general partner, Earlybird VC. They've just announced, I think literally hours ago, a new fund. So they're going to break down what is this, where is it going to be deployed, what are some of the key areas that they're focusing on, what are they most interested about from the VC perspective today. Then Paddy, Lambros, CEO and founder of Dex. They just raised
we forgot Marcus at BMW Ventures.
Sorry, of course, yes. Marcus at BMW Ventures. They just raised a $300 million fund. Return guest as well. So it's always good to catch up with Marcus. Good to see him again. Then
Indeed.
Paddy Lambros, CEO and founder of Dex. They just raised 5.3 mil seed led by Notion Capital. Going to dig into that. Then we've got Kaushik coming on, a return guest, good friend of the stream, partner at EQT Ventures. Going to be digging into the OpenAI and Microsoft partnership loosening. What does it take for someone to raise an A round in Europe at the moment? What are the metrics you should have? What are the metrics you want to have?
Yeah, he's famously bullish on Europe, right? So
yeah, he's going to be giving a great perspective on
EQT, right? So
great perspective on what does it look like from the VC side? What are they looking at? And then also we're going to talk a little bit about Sov AI, what they're doing internally, and how they'll be deploying it. Kaushik's takes from an outside fund, and then last but not least, we're going to have to maybe trumpets for this one. Do you know what this last guest, do you know what this means for the show? Just like forget about the news, forget about, everything that's going on
forget
right now.
about it. Just forget about it.
Like, do you know what this means for the show? This means that we will have officially interviewed all of the Legora C-suite.
Let's go. Trumpets for us. Put the trumpets on
as well.
Yeah, it's big up ETN. Here we go.
We've got Patrick Forquer, the CRO at Legora. We're going to be digging into a load of stuff with him. Most notably, the news that was released this morning that they've had a $50 million extension on their Series D. Atlassian and NVIDIA's venture arm have come into the round. This comes literally mid sort of timeline battle between Legora and Harvey. We saw Paul Graham get involved on Legora's side. We saw Matt Miller get involved on Harvey's side. Two powerhouse VCs going at it.
We're going to jump into that before we do anything, but yeah.
Nice. All in the good name of law and AI. And then, of course, we will be talking about the Jude Law campaign, which took over the timeline, took over London for a little bit. It also took over
so much law, Jude laws, and they're building law spelt a different way. So it's good.
There we go. I'm assuming that's why they brought him in, for that
just for law, but for both law and law.
Well, it's funny. Yesterday when we were, where did we go yesterday? We were meeting someone. We can't talk about that, but we were meeting someone.
How informative! That's good.
In Shoreditch, and Shoreditch obviously has the roundabout.
That wasn't yesterday. That was the day before.
That was yesterday, wasn't it? Was that the day before?
Because I met someone else secretly
Yeah, you did.
yesterday.
You had another secret meeting, didn't you?
I had another secret meeting.
I didn't have any secret meetings yesterday, but
I was like chucking out caps left, right, and centre. It was great.
wow, what lucky people you met.
Yeah.
But when we were leaving this other meeting, so this was on Tuesday, I didn't know that roundabout is called the Silicon Roundabout in London, which I'm a bit like, come on.
I feel like that's kind of died a death now, purely because of King's Cross.
Yeah, I know, how could you not
Phoenix
give that
from the
award
Flames
to
comes
King's
out.
Cross?
Yeah.
But what was funny was there was they have a billboard there that just runs ads like continuously, obviously. And the Legora ad was on there with Jude Law, which was amazing. And then like right after it was the Uber Eats ad, which also has Jude Law in it.
Jude Law's just like swiping
Jude Law's
up this
getting
like
the
tech
bag,
cash.
man. Jude Law's getting that bag.
That's probably like a collective like, I don't know, $4 million.
Probably. I mean, Uber Eats would have paid him insane.
A few mil.
Because they and Just Eat do Just Eat kind of pioneered that let's get a celebrity on and make a song around the ad type thing. For, like,
Yes.
the food
Were they the one that did
delivery.
Snoop Dogg?
Yeah.
No, was that Deliveroo? Or was that
Yeah,
just, that was Just Eat. That was Just Eat.
Yeah, Just
you're right.
Eat. But I think Deliveroo done any? I can't think of any that Deliveroo have done. But now Uber Eats getting in the game, which is great to see. I love this converging sort of industries of celebrities coming into
Tech, celeb.
Tech,
I mean, tech companies, now have, they don't have to IPO to have enough money to be able to afford
doing something
to drop like $2 million on a celebrity to come and just like sit in their ad for a bit. Which is what they did, and it worked very, very well. And
it works well if you do it well,
because the out-of-home ads were really good. I've seen a bunch of stuff on X about them, which obviously is a good sign, and basically everything is positive, which is cool. And yeah, making law attractive again or something.
Maybe I'm
something like that.
Not sure I know the actual tagline.
Well, anyway, we can dive into that because we've got so we're gonna touch on obviously the earnings call yesterday. We had Microsoft, Meta, Google, Amazon all kind of doing their thing, and it was good. Everything is up, which is cool. We will dive into that. Then we have Harvard Legora kind of fear, uncertainty stuff around it. Paul Graham is a Legora maxi, and that kind of kicked everything off, which was interesting. Obviously, the Altman and Musk, whole trial is something that we want to dig into as well. And then we've got super fun one, billionaire guest at the White House.
For King Charles' dinner.
King Charles.
King Charles was dropping some bangers at that dinner.
They're all
taking over the timeline. Did you see the Trump bell he gave to
the what?
The bell. He gave them a bell and the story behind it.
I did not see a bell.
Just super quick. In World War II, there was a submarine, and that submarine was like played a really integral part in the war, like taking down some enemy other submarines or ships. I don't know, but the submarine was called like the SS Trump or something, but like Trump in the name. And so they got the bell from the submarine, from the actual submarine that has like Trump engraved on it. Gave it to Trump.
Is it down in the water? Is it like?
No, they have it. They have it.
Oh, okay.
Yeah. They took it off the thing and they awarded it to Trump that's pretty cool. As like a sign of like our allegiance from like back in 1945 to up until now. Really cool. And then he goes, when he's awarding it them, he's like, and if you ever need anything, just give us a bell.
Hey, let's
like,
go.
Yeah, he was dropping bangers.
He was actually, he was dropping
So
lots of bangers.
to see that. But we can get into that later. Let's talk about the earnings. First on the dock. So just quickly before we do this, everything, as you say, was looking great. Revenue, the revenue numbers actually beat all estimations across the board from what had previously been seen post this massive CapEx deployment. We're talking like combined something that's exceeding like around 600 billion for basically all of the Mag 7. All those numbers looked good across the board for basically everyone, but only Google's stock bounced. Only Google stock went up. It was up like 4.5% on the day. Every single other one dropped, which I'm not surprised. There are alternating factors here going on. Obviously, with Microsoft, their OpenAI partnership has loosened. Meta, I think it was pretty great. Everything was all above board. Amazon, the same thing. Everything was pushing up, but for some reason, the markets didn't respond in a way that one would think from.
Again, it's the CapEx stuff, right? It's the main question is we're now in industrialization phase. We are not in, hype and AI kind of experimentation phase. That's over, right? It's now the core tension between all this huge capex spend. All of the Mag 7 are north of $100 billion in capex. I'm pretty sure like Amazon it's Google, Microsoft, and Amazon are all guiding towards $175 to $200 billion in capex, which is bonkers. But it is that tension between that capex spend and actually realizing revenue. Like what is moving the needle? The ads businesses are absolutely crushing. Amazon's ads business is almost at $100 billion. They did $68 billion in 25, and they're crushing it. They've had a very good start to 2026. So it is interesting. But yeah, let's dive in.
Well, we can discuss. So this is Catherine Blun. We don't have to get this one up. We can just go through the article. But this is specifically for Google. Catherine Blunt over at the Wall Street Journal. Google parent company Alphabet reported a 22% surge in first quarter revenue as the artificial intelligence race fuels growth of its cloud business. Alphabet's sales reached about 110 billion, exceeding analyst expectations. Net income was 62.6 billion, an 81% increase compared with the same period of a year earlier. That for me is just absolutely insane. And I remember saying ages ago when we were talking about more when it was the Gemini, the Gemini is crushing right now and it's better than Claude and it's better than like Codex. I'm not sure if Codex was out at the time, but it became very apparent, I think, that this thing will just be printing money. Like they have an infinite money machine in the ads business. They're completely verticalized, like across the whole stack. Now, like they own Waymo.
Yeah, I think also like a dark horse is like the fact that they've got, Google Workspace, right? Like integrate AI into that is like an easy thing.
Which they're saying they're doing.
All of the kind of legacy stuff. Well, they are, right? Like you can see it as a
they
consumer.
did
but all of the legacy stuff like search is up, e-commerce is up, everything, right? So it's like integration of AI into search has been positive. So this is like a huge kind of tailwind. Google Cloud 48% up in annualized run rate. It's now at $70 billion. Search is up 17%. YouTube ads up 9%. So it is just bonkers.
Can I just quickly say, I have noticed on the YouTube ads.
Yeah.
Do you have a YouTube Premium?
No.
I don't either. I've never had it.
I don't think anyone has YouTube Premium.
No, apparently people like I know a few people that have it.
What do you get?
No ads. You buy it and you have no ads.
Oh, I actually didn't know that.
Yeah. Wait, that's what. Yeah.
I don't know.
You pay to get rid of the ads.
I've genuinely just not even like thought of.
It's super cheap. It's super cheap.
What is
it's
it?
like, I don't know, £3, £4 a month. It's like absolutely fine to buy. I just haven't bought it because I'm just like, I can just kind of get through it with it's just an ad and then you skip it and it's fine.
I quite like Google ads.
I am indifferent. I'm some of them are quite annoying because I watch a lot of YouTube.
I spend quite a lot of time on YouTube.
Yeah, so do I. So I kind of see the same ones all the time.
Sure.
It's kind of like the Monzo one's always there. And it really annoys me. The Revolut
but I just love
ones
good ads. I love good ads.
But none of these are good ads, I don't think. They're just like standard Monzo, Revolut ads.
Monzo ads are kind of annoying.
But I've noticed recently, and this is the first time I've ever actually broached this in a public setting or even a conversation with anyone actually.
Conversation with like hundreds of people.
Yeah, because I watch like as you know, I watch like chess videos every night. I suck at chess, by the way. I should be well better.
Sure.
But I've noticed on the ad now, so it used to be like, okay, ad plays for a couple seconds, then it's like skip ad, that's fine. But now the ad will remain in the bottom left and you have to like hit these 3 buttons and then it's like dismiss. So even your video will continue to play, but the ad will be in the bottom left, so it like covers part of the screen, which I think that is the push that will push me over into buying YouTube Premium.
Okay, so
because it's like, so annoying. Because I have to double.
They're just kind of like chipping away.
They're making it worse. They're making the experience worse to get me to.
They've probably got the whole roadmap, and they're like, right, this is the user experience now. And this is what it will be in a year.
How can we just give them a nudge?
How can we just kind of keep incrementally increasing the amount?
Making the product worse.
Yeah. Like, how can we just make it more annoying for the consumer, but not so annoying that they churn, but annoying enough that they buy?
Yeah. And they got me. They haven't got me yet, but I will be purchasing tonight.
Okay, well we'll get back to it when
we can touch base on Tuesday.
Yeah. Touch base. See if you bought it over the weekend.
Yeah. I can report back.
And yeah, that'll be interesting. Anyway, yeah, so Google absolutely crushing it. Revenues at $113 billion or $114 billion, basically. Now I was talking about Microsoft.
There's a great quote here from Sundar Pichai.
Please.
It goes, this is literally taken from the calls. AI is lighting up every part of the business.
Let's go.
Which is awesome. But there's some more stuff on here for the
No, please.
TPUs and stuff. Like you've mentioned cloud division doing really well. The company said its cloud backlog growth was driven by demand for its enterprise AI tools and its custom chips, known as the tensor processing units or TPUs. It expects to record about half of the backlog as revenue over the next 2 years. I saw a chart on this, and the graph was just insane in terms of the backlog. It was like steady growth, and then there's just an insane spike just last year. These strong results reinforce our conviction to invest the capital required to continue to capture the AI opportunity, and that Ash Kenzie, financial CFO, told investors and analysts on Wednesday, we expect our 2027 capex to significantly increase compared to 2026, which is nuts, which is so nuts, because those capex announcements essentially broke the internet in terms of there has never been a project in which this much money has been deployed on a single thing in the history of the world. It like, I saw a hilarious tweet the other day that was like on the run up to the earnings calls. I think like Kaushik or something, or Polymarket had put out like Meta, Google, Amazon, Microsoft all doing their earnings calls on Wednesday, and someone quote tweeted like, the fate of Earth like is being like broadcast on Wednesday. Like these earnings calls are like the fate of the whole.
Well, I mean, what they are like cumulatively 25, maybe 20% of the whole.
Yeah, I don't know what the figures are, but I mean, Nvidia's like.
I mean, they own like
9% or 7%.
Yeah, fine, but like
so it must
they own
huge.
about 20%.
Yeah, 100. But imagine if this had missed.
Why
imagine
is it on the
if,
same day? I don't get that.
Yeah, I think it was the TB guys chatting to Vlad, the Robinhood CEO, about this, and they asked him, like, why is this like happening? He was like, I'm not really sure, but I can give my perspective. And it's, at Robinhood, when we do our earnings calls, like, we're not sort of like colluding with other people as to when to do them. There's like a certain window after the quarter ends where you have to do them.
It's like, not famous, but like I know it's a fact that like you never want to do it on a Monday or a Friday, right? Is that true?
I don't know.
I don't know. Anyway, I think they all kind of want to do it on like Tuesday, Wednesday, Thursday. Obviously,
get it out
only leaves 3
midday.
days.
Hump day, get it out.
And it's just one of those things that like it all, all of these CEOs are super busy. It kind of all just like fell on one day.
I think there's probably a tactic.
Literally the fate of the market is resting.
But imagine if these had missed
on like a half an hour window as well.
Yeah. Imagine if those had missed. Like imagine if.
Well, it's going to happen someday, I reckon.
Yeah, true.
I mean, I don't know when.
But I do think that there's probably some element of like, if these guys are going, we should probably go as well. And like you can only do that if you're like Mag 7.
I don't know if what the process is in terms of how long of like notice that you have to give to be able to be like, hey, like we're going to go and do our earnings call this day at this time.
Yeah. How do you have to like? Do you just
something?
do it? Yeah. Do you just apply or just?
Yeah.
I know, like,
one day you wake up, go right, we're ready to go.
Yeah, just jump on X, live stream.
Yeah, it's done on X. Yeah,
because I know like Brian Armstrong does his. They stream it onto X.
Yeah.
But he's less like reliant on traditional media now. He's mentioned multiple times that he'd rather just go direct because he spent like so many. I mean, crypto founder back in the day was just getting slayed by everyone and battling like a really uphill battle. But
sure.
Anyway, we can move on to the next company we have listed.
So Microsoft
is Microsoft
up 17%, total revenue at $81 billion. Azure is a big chunk of that. It is their kind of primary like AI growth, up 39%, which is actually bonkers. Microsoft Cloud is like a total, it's just surpassed $50 billion in quarterly revenue, 26 is up 26%. The GitHub Copilot is up 60%. We obviously talked to, who was it? Who did we talk to about the
Copilot?
Yeah.
I mean, I've spoken to a bunch of people about it.
On the show, AI Engineer. We spoke to
Marlene.
Yeah?
Think so.
Marlene.
Think so.
Shout out to Marlene. You're doing well because it's up 60%, which is actually bonkers. ARR is now $2 billion, which is crazy. And then just 365 up 19%. Yeah, absolutely ripping. Good on Microsoft.
Sales reached 82.9 billion, 18% increase from March quarter a year ago. Net income was 13.8 billion. Both sales and net income exceeded Wall Street expectations. This is from Xavier Martinez over at the WSGA, by the way. CFO of Microsoft said, broad and growing customer demand continues to exceed supply. We remain confident in the return on these investments. And then Satya, Microsoft CEO, has sought to transform the company into an AI powerhouse in recent years. Azure, its cloud computing platform, has become the infrastructure backbone for AI startup OpenAI and other companies building AI applications. But Azure revenue growth slowed in the company's last quarterly earnings report, and its data center push has struggled to keep pace with demand. Just on that as well, we'll cover it later with Kaushik, who's going to come on and discuss this. But obviously, OpenAI and Microsoft did loosen their partnership. We spoke about this on Tuesday, I think. I'm not sure if we even got to it in the end, actually. Because it was such a busy show.
We didn't, but their last, so like the biggest number is Microsoft's remaining performance obligations. It was listed at $625 billion in the last earnings. It's up 110%. And of that, 45% of that is OpenAI.
Wow.
Yeah. So it's a lot. It's still a lot of distribution type thing.
So now they can go and work with like basically. So I think Andy Jassy over at Amazon put a tweet out basically saying that they were starting to do some stuff with OpenAI.
Sure.
Funny story about Andy Jassy. I actually kind of met him in Seattle. This was nuts when at Convergence we were in this Amazon do this like accelerator. They choose like 50 companies worldwide, and we were lucky to get into it. And basically involves like a trip down to Seattle, and you go there, chat with a bunch of people. There's like 50 like founders, co-founders, whatever. And Andy Jassy comes into the room to like talk to everyone when he's there. It's really cool. It's like a couple of weeks after he'd moved into the role.
That's pretty dope.
And I think it was meant to be kind of people knew he would be there, but it was meant to be a bit of a surprise that he was coming in. And when he came in, he did like a small speech for like literally 3 minutes, 4 minutes, just like basically like, get me out of here, basically. And at the end, someone was like, oh, now we can do like photos, maybe like we can get a couple of photos if you want to come to the front. I watched fully grown men. This is like, you know, like the Kardashians, but for tech bros.
Yeah.
I watched fully grown men climb over tables and like run along tables to be the first one to get a photo with Andy Jassy. I swear down, it was wild. But he was like a celebrity in the room. It's like genuinely like a celebrity for these people.
Tech celebrity.
It's
a hyper niche industry.
It was nuts.
When
I was literally,
but it's very engaging.
Because it's something you'd see like someone, you know, if like Travis Scott was, you know, doing that, you'd imagine like Travis Scott fans would be like, oh,
well, like, you know, like 16 to like 18-year-olds would be like climbing over tables.
Yeah. But this version was like 30 to 45-year-old like, co-pilot engineers, which is really fun.
I love co-pilot.
That was a while. That was like a year and a bit ago. But
would they be climbing over tables now? That is the question, to get a picture.
It was a pretty small room, so it felt pretty intimate. But also at the same time, like that made it more weird that they were in their brain. They thought it was okay to like break social norms,
sure,
and like parade around tables.
Yeah,
which is funny, but yeah. Oh, they've got some good pieces here about the partnership loosening as well. Oh, this week Microsoft and OpenAI signed a revised agreement that offers OpenAI more freedom to partner with Microsoft rivals, caps the amount of revenue it must share with the software giant through to 2030, and removes a controversial clause in prior agreements. Microsoft, meanwhile, will retain access to the startups' models and products. So not a direct rip coming towards like revenue share at 2030.
As I mentioned, right, it's still like 40. It was almost 50% in a distribution type thing. So yeah, it's still a lot.
Microsoft stock is down.
It is. But anyway, let's move on. Talk about Amazon. Amazon, what's growing? Total net sales is growing by 14%, $213 billion. AWS is also growing. It had its fastest growth in 13 quarters. It's now doing $35.6 billion in revenue. It's up 24%. Their ads business, which is one of the things that a lot of people don't realize that they have.
I didn't know this was a thing.
It's pushing $100 billion, dude. It's absolutely bonkers. It was doing, I think it did $68 billion last year. It's now up 23% by $21.3 billion. So it's getting there. It could be and that $100 billion is money that they can spend on more kind of AI implementation, experimentation. As we mentioned, the industrialization of this thing, right? It's like these software companies are not now, they're not necessarily just software companies. Google has its TPUs. They're trying to get away from just being hamstrung almost by NVIDIA. Not that they're bad chips. NVIDIA's chips are the best, but it's more the price. How can they do this cheaper? How can they get compute cheaper? And any little bit of margin is billions of dollars worth of that. And you can see that in the capex, right? The 2026 guide for Amazon is $200 billion, which is the highest in the Mag 7.
Wow.
Which is like actually staggering, considering it was like a big thing that they're all over 100 bill, and now this thing's like Amazon just doubled it. $200 billion. Let's go. Amazon are crushing. That you can see that, right, with their free cash flow. It's like significantly down, probably because of it's about a $50 billion surge in their spending in AI. So obviously free cash flow is very much down. But anyway,
we can dig into the
you,
WS
sir.
Journal.
What did WSJ say?
Before we dig into this excellent piece by Sean McLean,
big up.
over
Did
at
they
WSGA.
did Sean write all of these?
No. Each one has a different author.
That's cool. I like that.
But
at the WSJ, they were just like, you take Microsoft.
Yeah, let's just divvy this up.
I mean, maybe they
Which one would you want
probably have
if they
their
were
own.
divvying
They probably have their own
team. Yeah.
No, it's in like one person owns Microsoft.
Yeah.
Reporting.
It's like an
One
account,
person.
right? Like maybe you own that account.
Yeah. That's definitely what happens.
But well, one day when we bring all our journalists in, we can do that.
Yeah, please.
But on the Microsoft ads thing, on the Amazon ads thing, I realized the other day. I can't remember what I was watching, but I was watching something on Amazon Prime.
Yeah.
Might have been the new episodes of The Boys, actually, which I'm not really a huge fan of the new ones. But I know it's on there. The adverts on Amazon Prime, it's not like a traditional advert. All the adverts are just products on Amazon. So like you're watching your thing, an ad comes, and it's like a pretty like obviously like somewhat poorly done advert. Like I don't know whether it's like people are... they're like, I can film my own advert and I can send it to Amazon and then they'll play it through Prime Video. But it's obviously not like, a traditional, well-produced advert. It seems like almost bootstrapped type of like,
so they're not
like
spending
e-commerce
$200 billion of capex on
No. And it's really, and then as the video is playing, they will have a link, a square. So if I just pick up my remote and just press enter, like it's automatically selected. It will be a link back to Amazon Prime to buy the product on the screen. So if you look at that flow, it's incredibly, I could be sat on my couch. Okay, so traditionally I'm watching ads on, Sky was something I used to watch a lot when I was a child. They're playing an advert midway through a thing and then maybe they're showing me some cool products, the steps to get to that. I've got to then maybe go on my laptop or like go to the nearest store or go online and order it. But this, I could just sit there and pick up my remote. And if you have, buy now or, connected to your Prime and everything's just like super fast checkout, you just press enter on the remote and then that thing, you just get the thing that you're looking at on the TV.
So cool.
And I said, me and my friend had this conversation, be like, that is actually mad. Like how streamlined that purchase process.
Well, it's just like, I think they've probably extrapolated the whole thing, as you're saying, right? They've extrapolated like, what is the journey from looking at ad to buying said product if you're keen? And how can I reduce that time so it reduces the amount of time for you to be like, do I actually need this thing?
Yeah, actually, nah.
Do you know what I mean? So it's like,
ooh, cool. Yes. And then it's like, then it's on the way.
Yeah.
Which is dangerous. That's kind of dangerous.
You know what you could, this is stupid now. You could buy the thing on Amazon and just sit there until the thing just arrives at your door. And without even getting up, you've got the thing in your hands.
It would be brought to me. Like my house can go get
you feel
the
like
door.
a king.
But it's bad. But I'm not really like an impulse buyer, to be fair. I don't really own a lot of stuff. I don't have that much stuff in my house. You know? So I don't really see something and I'm like, oh, I need that.
Yeah.
And buy it.
You're not like materialistic.
Well, I don't know. I like the stuff I have. You know, so like maybe I am materialistic.
Well,
but
no,
I'm not like a buyer of things all the time.
You're not like a hyper consumer.
No, I think most of my money probably goes on food, I'd say.
Good on you, pal.
Yeah, less like stuff. But for someone who would maybe be, for someone who is like a frequent shopper,
Bang. Yeah, you're
that
right.
thing's like crack.
Yeah,
like
yeah.
you can you see a thing, but and again, it's probably, I'm now realizing it will also be fine tuned to your purchasing history on Amazon Prime. It must be. So I'm not sure if the Prime account that I'm watching on is my own Prime account. It might be my friend, which I'm now like criminalizing myself live. But I think it's my friend or maybe my housemate. So like the products on
So you're getting an ad for something very
connected. Well, I mean, it's just like toothbrushes and like deodorants. So it's all like men's stuff.
Right.
But I'm now realizing they'll go even deeper, won't they? They'll look at your purchase history. I mean, they should be doing this if they're not. I assume they are. But they look at your
ads will
purchase
be
history.
like history books or something.
Yeah, it's just loads of books about Napoleon and Julius Caesar. And then maybe like a nice Oral-B toothbrush. But I just, that came to me the other day and it was nuts. But a little bit of a sidetrack. Let's talk more about Sean
But quickly,
McClane.
YouTube does that as well now. Where it's like,
yeah.
But obviously, like it's an affiliate thing. It's not their own company.
I don't know how I've done this, but my YouTube, it's actually really annoying. I need to sort this out. But like, my YouTube's just like, there's no cookies enabled. There's no like history enabled. There's no anything. So if I load up YouTube, it's just grey. It doesn't recommend any videos because it doesn't know what I like because like I've somehow managed to.
Are you not signed in?
Probably not. I don't think I'm
so
signed
that's
in
why.
then.
Okay, I get signed in on my Google account, so it's like it knows what I like to watch.
Yeah. I need to sign
it
in.
recommends the account, the accounts that I've watched before.
Yeah.
And it's like,
I need to sign in.
Tennis.
Then. Yeah, or mine's just grey. It's so annoying. So the only thing I watch on YouTube is literally just like videos of Eric Rosen playing chess. That's literally it. There's like I haven't searched for anything in the past like 3 months.
Personalization is wasted on you, basically.
But the ads as well. All my ads are just Monzo, Revolut, and then occasionally something random.
Sure.
Anyway, back to Sean McClane. Sorry, Sean, for keeping you waiting, and thank you for doing this piece. Chief Executive Andy Jassy, my boy, said that revenue from the company's Amazon Web Services grew 28%, the fastest pace since 2022, in part because many customers building new AI agents want them stored in the same spot where they maintain their other cloud services and data. Revenue for the period rose 17% to 181.5 billion, while net profit increased a sharp 77% to 30.3 billion, which Amazon attributed to a pre-tax income from its investment in Anthropic. Both figures beat analyst estimates according to FactSet. Few more figures. The company forecast revenue for the second quarter of between 194 billion and 199 billion. Oh, surely just round that up to a cool 200, Why leave a little lone Billy there? And an operating profit of between 20 billion and 24 billion. The company said capital spending in the first quarter was 43.2 billion, primarily on AWS and generative AI. For the full year, Amazon has said it would spend 200 billion, a 60% increase from 2025. These numbers are nuts. And in a weird way, I know the stocks have reacted negatively to everyone apart from Google, but it's kind of working.
Yeah. Well, okay, look, so the key question still, you can see with the CapEx spend, right? There's still the key question and the key tension. Will all of this result to, realized revenue? And how does it do that? So it's like, is it proprietary distribution? Is the how much more of this AI spend are we going to be able to squeeze more like ad dollars out of the system? And it seems like all of these hyperscalers ads businesses. That's like the key player. That's the main player. I mean, look at Meta, right? It's on Instagram. I'm now indirectly using AI, or like
on Insta,
because the ads are all AI. They'll be AI like recommended, right? And so it's like
they're good on Insta,
and they're very good, right?
Like, so that's somewhere where if I was a buyer of things, I'd be broke because everything it gives me is amazing.
Indeed, yeah. So it's a clear and they're in that very, very fortunate position where it is such a beautiful integration to be able to be like, hey, now we've got this thing AI, we spent a ton of money on it.
hundreds of billions of dollars on it. How can we integrate it into the product to make it better and to squeeze more ad dollars out of the system? Integrate it into one of the best distribution platforms in the world, i.e. Instagram, Facebook. So they're in a very, very positive position, and it'll be interesting to see how many more ad dollars they can take from this. Is there still more kind of juice coming out?
Squeeze the lemon.
Or have they squeezed it? Is it like a raisin?
A dry prune.
Is the ad business a dry prune, or is it still an orange?
We'll find out next quarter. But on the I think there's probably potential for. We saw Meta announce that they were rolling out like thousands of fiber technician training jobs, right? A couple of weeks back, we saw that. We were saying, okay, they're moving as far downstream as they can possibly go to literally building the things that they are constrained by, whether it's like data centers, compute, energy, whatever it is. I would not be surprised if we see, all these other players start to do something similar.
Yeah.
I mean, the stakes are too high to not hedge for that. I think.
Yeah.
They just have to deploy cash.
Well, otherwise they're going to be constrained and buying very expensive compute from Nvidia. And that's basically exactly what they don't want to do if all of their other competitors are going to be doing, moving downstream, as you mentioned.
We're seeing this sovereign quotation marks trend
back into
roll through, but we're seeing it here, even microcosmically, right? All these companies, no one wants to be constrained on someone else. The stakes are so high with this thing that everyone needs to own their own distribution. We're seeing it.
Well, that's what I'm saying, right?
Countries,
software companies aren't software companies anymore. They are.
Well, they're like countries.
Well, no, software hyperscalers particularly aren't. They are industrialized. They are becoming. Industrial manufacturers of said thing, so that they can produce and software at the cheapest possible.
And they have to act like this because these guys are running businesses that have larger GDPs than some countries.
Indeed, they do,
which is insane. So I guess the sovereignty stuff kind of
running a country.
Yeah, they kind of are in terms of how many people are involved and their economic and global influence on the world. Which is only going to increase as these capex spends increases and we push to AI. Let's go on to
let's move on. Before we do that, Framer, build better sites faster. Go to framer.com/ETN. Let's move on to Harvey Legora.
But no, we're not done Zuck.
Oh,
how could you leave?
Oh, sorry. What? I thought we were done.
No, we've not done Zuck's one yet. We've got. This is from Megan Bobrowski over at WSJ. A nice rundown of Meta's earning reports. Meta reports big revenue jump and projected spending increase.
Yes,
shock. Same as everyone else. Sales grew 33% in the first quarter to 56.3 billion. Company raises capex outlook again. This is what we're seeing in every single one, basically, as component prices rise. Platforms reported revenue increased 33% in the first quarter. Its biggest year-over-year quarterly revenue jump in nearly 5 years. But it said it would spend even more money to build out AI data centers this year than it had previously forecast.
Higher earnings, higher spend.
This is it. The company said it brought the 56.3 billion in sales and net income, 26.8 billion. Both sales and net income came in ahead of analyst expectations, although 8 billion of net income was the result of a tax benefit the company realized in the first quarter of the year. Meta increased its projected capital spending for the year by 10 billion to a new range of 125 to 145 billion, citing expectations for higher component pricing and additional data center costs.
This is
absolutely
interesting.
Insane.
When I was doing when I was doing some research and all of this was coming out, Meta was the outlier because they don't technically sell AI. What they do, they use AI to make ads, listen to this, 6% more expensive and 18% more frequent. And therefore cleanest, obviously Meta has the cleanest path to monetization. As what I just said, they have one of the two of the best distribution platforms in the world to be able to distribute ads. But they're using AI to make it more expensive, more frequent. Super interesting.
Well, I saw a figure the other day. I think it's in this article. Is it? Let's check. No.
Have a little look.
About their ads revenue in particular. there was something. I mean, the number I saw was shockingly large, so I might have to maybe fact check it, because it was something almost unbelievable. But then we can continue with the article for a little bit. There's a great part from Zuck here. So Meta Chief Executive Mark Zuckerberg, who, by the way, is now physically working alongside some of these engineers. He's getting stuck in. He's back in the trenches. There was a great piece, I think, a few weeks back again from the WSJ saying that he's back in sort of not manager mode, not founder mode. He's in engineer mode. He's like back to doing what he loves to do, which is great. We love that. But Meta Chief Executive Mark Zuckerberg addressed the capex increase on a call with analysts and investors Wednesday, attributing the higher component cost to the pricing of memory chips, which are in high demand at the moment. We've seen this with the sensational rise of SanDisk Corp, of Samsung as well, reporting insane quarterly revenue numbers, all connected to these memory chips. There's an account on X called Zephyr. If you haven't followed him, please do. He literally called and wrote a thesis for the SanDisk price increases when they were at like $60 about 9 months ago. He wrote like a full thread on why SanDisk was about to like explode,
right,
citing that like if we're able to properly sort out generative video past 5 seconds, we will see that would be reliant on specific memory chips. Then obviously we have gone ahead and done that. Generative video can now span multiple minutes, and we have seen SanDisk go crazy. He literally called it and wrote a thesis as to why this would happen. It's a really great account. But a quote from Mark: "Every sign that we're seeing in our own work and across the industry gives us confidence in this investment," he said. That said, we are very focused on increasing the efficiency of our investments. Meta recently extended the life of some of its servers to deal with a shortage of memory chips. Meta, Microsoft, Amazon, and Google had already announced plans to collectively spend more than $650 billion to build our AI infrastructure this year. That's what was previously announced, which is insane. More than the cost of the Apollo space program, US interstate highway system, and the US railroad build out in the 1850s. Which I think the US railroad build out in the 1850s was one of the most, the highest margin investments of all time based off the gross revenues that were attributed to that initial investment, which is insane. Meta's previous projected spending this year was already a big jump from its $72 billion in capital expenditures last year. The increase in spending comes as the industry is facing a computing power crunch. In a response to a question on the investor call about 2027 spending plans, Meta's finance chief, Susan Lee, didn't offer specifics. Our experience so far has been that we have underestimated our compute needs, which seems to be the same for everyone, even as we have been ramping capacity significantly, she said. So our expectation is that compute will become even more central to the business going forward. Meta has been ramping up its AI efforts, both in terms of training new models and getting its 70,000 plus workforce to use AI more in their daily jobs. And then obviously connected to what we mentioned in terms of like they're going downstream, they're like leaning into like the industrial aspect of this, like let's literally just pay and train people to build more of these things that we can then own and then use. And they also mentioned MuseSpark in here, which is probably worth bringing up, but the company released its first new model since it overhauled its AI teams last summer and named Alexander Wang as its chief AI officer. The model called MuseSpark was released in early April and it's competitive with models from other leading labs, according to evaluations from both Meta and outside testers. Quickly on that, when they released the benchmarks were insane and it got a lot of praise online. A lot of like significant individuals were like, oh, I'm sorry, Zuck and Meta, like I wasn't familiar with your game. Like this is kind of nuts, like fair play. But seems like I haven't really seen much on it. There's not really too much discourse. There probably is obviously in the internal circles. I'm not an AI engineer. So it's probably still, being used in conversations quite a lot, but I haven't seen anything around that in the mainstream since they released it, I think maybe 3 weeks ago. But it did come out with a bang. And it's kind of nice. It's like, it's hard because I again, like not really on the inside, but it's very rare that any of the model conversations ever involve Meta, Yeah. So I'm just not sure, like, what's going on there, like.
But they're the best company and they're the best positioned company to kind of realize like revenue off the back of AI.
And just like plug it into all that.
Plug it into the whole system.
Plug it into the ads. Plug it into. Does anyone use Facebook anymore?
Yeah, Facebook is a huge business.
Like,
Obviously,
do
but it's not
people
like-
still?
Yeah.
No one like our age takes a photo. I'm going to put this on Facebook.
No.
Obviously, like, it's not the social platform itself that is like really generating like revenue. I guess there's like games within that and stuff.
Yeah,
but
exactly.
The ads on that platform is what's
Exactly.
up
And
to do.
I think people still do, but like
Probably
our generation
older.
just less.
maybe like 30 plus.
Yeah, fine. Yeah.
Yeah, that probably sounds about right.
But still, yeah, very big kind of like social networking business, for sure. Anyway, base the infrastructure for the on-chain world. Go to base.org. Let's, can we move on now?
Yes.
Yes.
Just a quick
Come
thank you.
on.
Thank you, Megan, for
So
that article. It was excellent.
there was a little bit of stuff going on yesterday. PG, Paul Graham, praised Legora as the most impressive startup that he's seen in years, which kind of sparked a bit of a debate between Matt Miller and who's a Harvey investor, and Paul. I don't know if he actually did reply to a few, but anyway, basically the tweet that now has about 500,000 views from Paul goes, have we got this up?
Yeah.
Just went to visit Legora, the most impressive startup I've been to visit in years. They're going to surpass Harvey in 2027. After that, their only potential rivals will be the model companies. And if ever there was a territory you could defend against the model companies, law is it. Very much a Legora maxi. David Eckstein, replied to this and said, "Thanks for coming by, Paul G. The talent density and execution pace are off the charts.
Can we just get a quick
you could
trumpets for
see
David?
it up close?"
just
Mr.
wanna-
David Eckstein, friend of the show. He is. He's also chummy with PG.
Let's just take a quick second to talk about David very quickly. David was the CFO of Vanta previously, who, by the way, have just crossed 300 million ARR. I think, in part, a lot of help from David. Now he's the CFO of Legora, who will very soon be crossing 300 million ARR.
One of the fastest
David
growing
is
companies in the
not
world.
just a killer operator on the C-suite level, but is also an incredible picker. He's got an eye for exceptional talent in companies.
Yeah.
So quick shout out to David Eckstein.
Big up, David. And then
great guy.
Kanat Becht replied to that tweet and said, "What is Harvey's moat?" PG then got back and said, "They don't have one. The only reason they're ahead is that they started earlier, but Legora is growing much faster." And then Colin asked Grok what are Harvey's and Legora's moat against each other and against the model companies like Anthropic and OpenAI. And Harvey's moat versus Legora, first mover advantage, deeper big law enterprise integrations. They're doing 200 million ARR. Legora's edge is apparently they're faster, higher iteration, which obviously kind of David has kind of mentioned about how quickly that they're moving. And came on the show, when he came on the show, it was just like, they're just moving, we're just moving so quickly. If you saw the numbers that are spitting out this company, you'd just be like absolutely gobsmacked. Grok says they have a simpler and quicker UX for many users. I've actually
Matt Miller clapped back.
I've never seen the Harvey product. I've seen Legora product, and it is very, very lovely. Very attractive.
So
As
Matt
is
Miller
G-Law.
came. This is
good.
that we're now seeing the battle of the VCs, and I guess if we look at maybe European versus US comparisons of who's going head to head, Legora and Harvey seems to be the one that's getting the most limelight in terms of
because this is the
drama
first
around it.
time, and I think actually someone said this. So this was a tweet from Varun Ram. He is building Lapis. Nice. He said Harvey versus Legora is the first time we're seeing VC firms go head to head every round in every other respect. Brand marketing, PR, among other things. He said usually the second player in a space is a round or two behind P0 versus Exa, for example. And there's some nuance with positioning, but with Harvey and Legora, firms are pumping in so much money at a level round basis, which is very, very interesting to see play out in real time, which is true, right? They're literally raise a round, raise the same, raise a round, raise the same, or like kind of,
I remember when we saw Harvey raise.
Harvey raise, we call it. We
were away.
When's Legora going to raise?
We were looking at the article and we were like, Legora's going to raise in literally 25, 30 days.
Yeah.
But they must hit, because the VCs, they must hear very small world, right? If someone big like that is raising, the word usually gets out.
Sure.
So it's like as soon as conversations start with one person, let's say Harvey decides, hey, we're going to go and raise like hundreds of millions. That decision to do that and then start having conversations with VCs must find its way back to Legora, because like those VCs will be connected with other VCs.
Oh,
who are connected
100%.
with, like, the Legora VCs.
Yeah,
and blah, blah, blah.
100%.
So like you can kind of, they're raising, like cool, let's just like, now we're raising as well.
Let's raise again.
Like, you kinda
It's
have to,
king
right?
making yourself,
Yeah,
right?
You just can't, you have to keep up from like the capital perspective.
MD at GC, General Catalyst, Yuri Sagalov also tweeted and quote tweeted PG's tweet and said, every single person I know who has spent time with Max Unstrand and Legora has come back with the same sentiment as Paul Graham, which is I am Legora Maxi.
Yeah.
So it's going to be interesting. I mean, I assume we're deep diving this with the Legora CRO today. Or we'll touch on it.
Yeah, we can mention it.
We'll do a bit of a touch. But yeah, it was interesting. And obviously, did we read out Matt Miller's tweet?
No, so let's get that up as well.
Yeah, so Matt Miller obviously is a Harvey investor, and he said, respectfully, I disagree here. Understand the desire to promote the company you've backed, so I will do the same. I looked at both and made the decision to back Winston Weinberg and Team Harvey. We've now invested twice. Harvey is adding a full Legora of revenue every month and killing it across US and Europe. There is room for two vendors in a market that is large and complex, but make no mistake, Harvey is the market leader, and the company is on fire.
So I love to see this. I think
so
Matt Miller's response is a very respectful response. You know, he's like, he's opening it with respectfully disagree. He's being firm. He's saying, if you're going to play this game, I'm going to play this game as well. Both sides are entitled to.
That's what Sean McGuire said. He said, I love the tone of message. Confident while taking the high road.
Nice.
Crossing swords.
Okay, yeah, he's like war maxing right now with the crossing swords. But this is like, I think this is good. I think we need more of it. What I would love is if we could maybe see if Matt Miller and PG would come on and we can have an open debate as to the Legora Harvey fiasco.
Yeah.
The open call out for both of you. We would love to have you on.
Obviously. We'd love to have you guys
we can do
on.
a live debate.
But let's obviously both incredible companies. I'm a bit of a Legora Maxi for sure. And I back PG. But yeah, talking about another company that's great. Leave outdated business banking behind. Go to airwallex.com. Are we good with that? Should we move on?
Yeah. Let's go into the trial.
Let's go into another war that's happening. The FT came out with an article yesterday titled "Elon Musk claims Sam Altman stole a charity in OpenAI trial testimony." The billionaire says it is dangerous to have someone who is not trustworthy in charge of AI. I would argue now he's not necessarily too in charge of AI compared to, Dario, Demis, and I guess Elon is there obviously kind of fighting the charge for XAI. I think 2 years ago it was, or when ChatGPT launched, it was OpenAI kind of all through and through. Get that, but now you've got all of these other companies kind of basically doing the same, if not better, in terms of performance, model performance. Market narrative, all of it, right? Like it's being chipped away from left, right, and center. So yeah, but then again, let's jump in because this is a kind of different thing. But it's very
high level. It's been very. There's loads of memes coming out of this already. So even upon arrival of the trial, a meme is circulated where there are obviously those like security scanners, like airport scanners that you have to go through, and they check you for whatever, if you have like a weapon or anything metal on you.
Yeah.
The clip that came out was Musk walks into the room, and then there is the scanners, and Musk just walks like around the scanner, like he just doesn't go through the scanner. But he's kind of like escorted, like someone's like that, no telling him to go. So everyone's like, why does he not have to go through the scanner? There's obviously, I'm assuming, been some sort of like pre-check, or he's just returning from like a break or something. But already this stuff has been coming out. Both parties have agreed that this wouldn't be like a public thing, like no one can have their phones or anything. No one can talk about the like the interworkings of what's going on right now in the trial. A bunch of memes coming off the back of that Elon is like pulling his hair out because he famously tweets. I think it's like it used to be a tweet every like 15 minutes every day, all day. Now he's calmed down a bit more, but. So he's kind of pulling his hair out that he can't publicize this. I would have loved to have seen what was that? Who's the guy who played Jack Sparrow in Pirates of the Caribbean? Johnny Depp. I would have loved to see like a Johnny Depp Amber Heard style like live broadcast of this. I think it would have done numbers. I don't know why. I think that would have been great. I think that could have been.
I don't think they care about the numbers. Like obviously you care about the distribution.
No.
They have ultimate distribution. They don't need.
I'm trying to.
It's like we can get numbers on this.
Not the individual people.
It's also
like,
really like obviously Sam Altman is. I mean maybe Elon Musk is like. I want this publicized.
I feel like
Sam Altman is
been
definitely saying I don't want this publicized.
No, 100%.
Anyway, let's quickly read some of the article. So Elon Musk told a jury that OpenAI and its chief executive Sam Altman stole a charity by converting the AI lab into a for-profit entity now valued at $850 billion against its mission of ensuring AI would benefit humanity. He said, fundamentally, the defendants are trying to make this lawsuit seem very complicated, but it is actually very simple. It is not okay to steal a charity, the world's richest man said in a court in Oakland, California on Tuesday. Altman and Greg Brockman, OpenAI's president, sat in the court as attorneys presented opening arguments in a high-stakes legal clash over the world's most valuable startup. Stephen Molo, Musk's lead trial lawyer, likened OpenAI to a non-profit museum with a gift shop, saying the museum store cannot sell the Picasso and pocket the profits. I like that. That's good.
Yeah. So like a lot of evidence is starting to being brought forward as well from this, and The Verge has covered this incredibly well. This is from the author. I'm not sure is on this, but there have been like a number of exhibits, let's say, that have been brought forward, and they kind of list out the exhibits that have been brought forward. So this is exhibit number 7 in an October 2015 email exchange between Altman and Musk. Altman suggests starting with $100 million commitment by Musk and asked if he could donate an additional $30 million over the next 5 years. He says Bill Gates isn't yet committed to donating, but what he hopes to have him locked down next week, adding that he believes Mark Zuckerberg likely won't come through due to his own AI lab, Facebook AI Research, FAIR. He also suggests that he and Musk start as the first 2 members of the safety board, with the potential to add 3 other members over the following year, calling it the second key for releasing anything that could be dangerous. Musk's response, let's discuss governance. This is critical. I don't want to fund something that goes in what turns out to be the wrong direction, which we ultimately, in his mind, believes is what happened. Considering he's funded it at pre-seed, seed A and B, I think, and is now kind of being left out to dry.
Well, it was his decision to kind of move on.
But
that was when it was a non-profit, and then it turned to
and now they are, so we've got that was exhibit 7. We've got exhibit 12, 14, 16, 70, 388, 152, 153. We can go over most of these today, I think, because some of them are incredibly interesting. And you're getting an inside look as to like the inner dealings of what happened. Like some of them are like private conversations that Altman has had with Musk. Some of them are private conversations that Altman's had with his lawyer about Musk, where Musk is just texting him off like a random number. He's like, "Hey, Elon, here, new number," and then like sends him a URL from the information. Like really disturbed to see something to do with like OpenAI and the thing, I can't remember the exact wordings of it, and like Sam's screenshotting that and sending it to his lawyer, and he's like, "What do you make of this?" And then the lawyer's like replying, and the lawyer's helping him make a reply. The lawyer's like, "Don't reply straight away." So like you get to see
the message like boil.
Yeah. You get to see
let it sizzle.
Inner workings, but we can get to that later.
Well, we have 15 minutes before. We have 15 minets like between guests, so we will get to that anyway.
We've got Jarek
before we have our next guest on the infrastructure for the on-chain world. Go to base.org. Here we go. Jarek, co-founder and founder and CEO at DeepL, is in the studio, I think. Jarek, can you hear us?
I can hear you perfectly well. Hey,
how's it going?
Perfect. Happy to be here with you.
No, thank you so much. Welcome to the European Technology Network. It's great to have you here. Maybe for, most people know who you are already, but maybe for the viewers and the listeners, do you want to just give like a brief introduction as to who you are and what DeepL is broadly?
Sure. So, hey, I'm Jarek, CEO and founder of DeepL. DeepL is a language translation company that has recently, very, very strongly gone into the direction of real-time spoken language translation. So, basically having every conversation out there being available in all of the languages of this world. We've been around, in what we've been doing for a couple of years, having pioneered basically AI translation for text and documents in this space.
Yeah, I remember seeing you guys, at my old company, Pigment. I think we worked with DeepL on a few things. We were a business planning platform. This was, a while ago. You guys were, I think it was first to hit this translation hype in regards to AI as well. So it's great to speak to you. You mentioned that recent development there. This is what people are calling a voice to voice translation. Is the term that I've seen online, which looks fascinating. Can you explain a bit more about what this is, why this is now a big focus? What was the company's thinking here?
Yeah, that the names that are being used for that are actually there's a varying set. You're gonna call it real-time interpretation, voice-to-voice translation, speech-to-speech translation. I've seen it all basically. But at the end, what we want to do is we want to make sure that me and you, we can be speaking different languages, and then somehow we can be also understanding each other. And I think we've seen quite a couple of technological developments in this area over the last 10, 20 years or so. There's always been these announcements of this technology is there and it's kind of starting to work. And I think everybody was always pretty disappointed about the outcome.
Yeah.
It was robotic, the speed wasn't there, the translation quality wasn't there. And I think we're arriving right now at a moment with all of the breakthroughs that we've seen over the last, 3 years that were in translation, but also in speech recognition and speech synthesis. If you kind of put it all together, you're arriving at a place where you can actually have very, very, very meaningful conversations. When I'm in foreign markets, when I'm in Asia, for example, I talk to journalists, I talk to my customers using this kind of technology, and it is really there.
Yeah. It's so good to hear. And I guess a first question that comes into mind is language itself becoming this sort of bottleneck that you're referencing. What is this bottleneck that we're seeing in global businesses then?
I think there's internal and there's external bottlenecks that you see. We have so many companies that are spanning the globe and how their organization is set up. You're going to have an R&D team sitting in one country and maybe the commercial team in another place. And we do default to English, as we do in this conversation here. But quite often, some of those teams can't really follow that well, or they cannot contribute to those conversations so well. We're seeing a lot of kind of voices from employees around the world who are saying, yeah, we can do English, but at the end, we really know that it's effective and we cannot transport what we want to say. I think the best example is this year, when we did our company kickoff for DeepL itself, we had our Japan team present for the first time ever in Japanese on the stage towards the rest of the company. And the cool. Kind of the way how they have lived up on the stage, the way how fluent they have been, the excitement for the product and for what they've been talking about was just so much more than everything that we've seen over the past years with them. Of course, trying to do English, but it's not their native language. It's not that easy for them. And I think that's kind of the difference that you see in internal. And then when it comes to external, it's becoming so much easier for companies to open up new markets. You think sure. Let's go to Argentina and figure this out. And until now, it was a big investment. You're hiring a local team. You're translating all of your marketing materials. It just takes so much time. And then you have to talk to customers, take customer support queries. It's become so much easier to even test these out and see, is this a viable market for us or not?
Yeah.
Can you
That's awesome.
can you talk to us about the technology and like how that's evolved since starting DeepL and now and why this thing is accelerating in terms of the technology, like what has enabled more fluency and better kind of I guess all of it, right? Speech and understanding. How has the technology changed?
Yeah, I think when it comes to like translation of the content itself, like when it's text or kind of the underlying maybe transcribed spoken language, we've just gone through like 8 years of development since the first models for that has been built, and like the architecture of those models, the size of those models, the training data, like basically everything has been completely revamped since then, and it was a journey on kind of getting the right training data for that, getting the right training methodologies for those models, getting the models big enough, kind of balancing between the models being good at accuracy, but also at linguistic nuance. Like you want them to be precise, but you also really want to make sure that it doesn't sound clunky in the language that you're translating into. Yeah. So just a lot of work there. But I think what really made then real time and like voice-to-voice translation is always real time. That was kind of the advent of models that can work better with audio. Being able to like really fluently transcribe what you're saying, being able to understand that, and also generate audio. And we've seen just like the whole market exploding on that in the last years, and also on the methodologies for how to do that.
That's so cool. And like you mentioned, so been a number of years going through with DeepL as well. You guys have been in the game for so long. What are the, like in your position as a CEO? How are the initiatives changing with regards to AI for like these enterprise companies? Like what's top of mind for you? I guess with the employees as well. Like are you making sure that everyone's using, maybe like some of them aren't necessarily like AI native. You're trying to upskill them. Like what are the C-suite AI conversations in enterprise right now? What do they look like?
I think all of those companies are still trying to figure out their way through AI, and let's be honest about it. Like it's not like everything is solved, and I think quite a lot of those companies are now looking very much into those areas where technology has come to a place which goes beyond POCs. Like you can very broadly go and like tell everyone, hey, please adopt AI. And there's some value to that. I think people are going to jump on this ship, and there's going to be like some amazing projects coming through, and you're going to see improvement through that. But then at the end, you have to go like one by one on like what is actually driving value at my enterprise. What is the core processes that we have? What is maybe like kind of the places that it really makes sense to improve? And this is where kind of POCs are probably not the right place to do that, or like developing it on your own. Those enterprises are starting to look at like, who can supply those specialized solutions in those areas.
Yeah.
I'm super fascinated. When I was doing some research, the numbers that DeepL has in terms of like the market share is absolutely bonkers, right? Like 100,000 businesses, 228 global markets, 82% adoption, which is like, among kind of like languages and the languages service. Can you talk to us about, over the period of founding DeepL and integrating into different markets, right? What like I want to say advice, but also like what are the learnings from like kind of taking a market and really taking almost the whole thing, right? You're like double the next competitor in terms of market adoption. It's just absolutely bonkers.
I think it's just product focus, honestly, like building the right thing and relentlessly making sure that you're building the right thing. And we've seen a lot of companies like grow really, really good through PLG, like amazing product, and that has just kind of created this growth story. I think for us, it was the combination of research, technology, and product. And I think that kind of really accelerates everything because you're not only differentiating through kind of the approach to users, the user experience, like the ease of use, but you're creating actually something that is like meaningfully different than anything else on the market. And that spurs a lot of viral growth and kind of creates those like flywheels of growth that you want to see in a business that's scaling very, very, very fast.
Yeah. And then in terms of the specialization of DeepL and then, the kind of winning the market against kind of more general AI models and hyperscalers, can you talk to us about the specialization of the product and making sure that you're highly integrated within your customers? I imagine that's like kind of the biggest thing that you have to focus on.
Not only highly integrated, but also really making sure that we can cover those use cases that those customers have very, very well. And that depends really in which area you're playing. Like if you're translating just like a simple email, then like your expectation maybe on the reliability of the solution isn't that high. But like if you're taking that Boeing maintenance record in the airline industry or something like that, or you're taking that legal contract that you're about to sign, you have to be able to rely on your partner there. And I think the kind of conclusion that a lot of our customers have been taking or what they've been seeing is that using general purpose AI for that is maybe nice for a POC, but like when you really want to apply that on a large scale, you want to have a specialized partner that's helping you in those areas and whom you can trust with the quality, but also who's going to help you bring that into this particular use case. Like we're seeing a lot of AI companies like running this forward deployed engineering model, which is essentially to some extent professional services, because you got to help those enterprises to adopt AI, right?
Sure.
Yeah, I saw a funny tweet, it might have been yesterday or the day before, is that something like rebranding consultants as forward deployed engineers was one of the best like marketing stunts of I guess like the past like 5 years, which is funny connected to that. So can you give us a picture then, like the competitive landscape for enterprise AI right now with DeepL? Where does it fit in with big tech? Like what's your sort of core area right now?
Yeah, so basically when you're a big enterprise and when you're running all of those processes that somehow touch language, I think a lot of those are still very, very manual, and you're gonna have a lot of human involvement in that. And that's been fair, like maybe a couple of years ago. But I think right now those companies need to start rethinking on how they bring AI into that and like completely change the way that this is being worked on. And if you look at, for example, like the product development life cycle, like localization translation is usually like tends to be the last part of before you bring in something onto the market, whether that's software or a new medication, that actually doesn't really differ. So anything that you can change in this process, like whatever you can squeeze out, it's not going to take a month, but it's going to take like 1 hour because you're doing that fully AI based. That's going to just like accelerate your product go to market so much. And I think this is like one of the best places to really start with that. You got to look at then obviously at the kind of quality level that you need to achieve there. I think probably software is a little bit easier if you're talking about that medication. You have a couple of more compliance loops. But then like having like a company like DeepL who kind of covers this whole bandwidth, we can help you find the right solution, which you're not gonna get if you're just gonna go to like an AI model and try to translate using that one.
Yeah, that makes sense. I got about 2 minutes left. Looking forward, what's the plan over the next sort of 6 months? Where are you guys going to be most focused on? What are you really excited about that you've got coming up?
Yeah, like voice-to-voice translation. Like this is like really a big project that I'm really so super passionate about. Also, really by myself, because like you can visibly see so much improvement in that happening in that area. I think what we're gonna see a lot is that being embedded into customer services. So I don't know, you're going to be calling up a hotline and you're going to be talking to someone on the other side who's going to be actually speaking another language, and you're not going to even know about that. And it's going to be live translated. A massive, really difference for companies. And we're working on putting that live with a couple of first customers for us. But like the quality of that and the kind of speed of this translation is going to be going down and down and down, so that it can be becoming a more and more interactive conversation over the next time. And that's probably like obviously our roadmap is fully packed, but this is like one of the most exciting things to cut it short.
That's so cool. Exciting. It's so awesome. Congrats to you guys. I know we're like hitting time now, but really awesome news. Sounds like you guys are killing it as always. And please keep us posted on updates. We'd love to have you back on.
Thanks a lot. It was a pleasure. Cheers.
Cheers, dude. Have a good one. Ciao. What a ledge. Awesome stuff. We've got Antoni Kiszka in the show next. This is co-founder of Derpetual and also recently appointed European Thiel Fellow.
Indeed.
One of 2 Europeans that were in the Thiel Fellowship.
Before we do that, leave our data business banking behind. Go to airwallet.com. I think he should be coming in any minute now.
Yeah, I'm just pinging him. We're chatting.
We'll see. Just quickly, David Eckstein 30 minutes ago tweeted and was like, I spent a lot of time thinking about what investor composition says about a company trajectory. Atislan and N Ventures, NVIDIA's VC arm, joins Legora Series D extension alongside a group of new investors, bringing the total round to $600 million.
Boom.
Big up David Eckstein.
That's it.
What a boy. Anyway, we have Antoni
in the studio.
In the studio, I think. Hello, sir. How's it going?
Hello. Welcome, everybody.
Hey, dude, welcome to the show. It's so good to have you here, and congrats on the news. It's so cool to see Thiel Fellowship. For the viewers and everyone at home, do you want to maybe just explain who you are, what Derpetual is, what you're building, and then also, like your new recipient of a Thiel Fellowship?
So, hello, I'm Antoni. I'm from Poland, and I'm building a company called Derpetual, which is creating a new kind of derivative. And, we could get into all of the complicated things, but essentially, what to fix? At the same time, the most important, biggest market in the economy, which is the derivatives market, $4 quadrillion of yearly volume, is at the same time a really small number of assets. And also, it's extremely speculative, and instead of fixing the problems that it purports to fix, it's creating new ones, making everything more complicated and slowing all of us down and slowing growth of the economy down.
Yeah. Okay. So loads of questions to dig into it, but what was the thought process to choose this? Why is this your founding path? What's the story behind this? When did you feel that like, hey, this is something that needs to be solved and I'm the guy to solve it?
Well, the idea itself, we stumbled upon a bit randomly. I think I was just always interested in both computers and how they can work to solve problems, and then in financial markets, because they seem like, this beautiful system that just encompasses every single thing about the world in one place. But with those two background interests, I was just talking with my co-founder one random day, and we were actually talking about meme coins, and we discussed how some meme coin was really bad, and how we would love to short it, and yet there is no way to do it. And from another, we realized maybe this is something that could actually work. Maybe we could build something that would allow us to short this meme coin. And then, as time went on, we realized this is something that could work on much more assets, right? Not just meme coins. And the same problem, which is there is not enough liquidity to allow longs and shorts, is not just a problem for meme coins. It's a problem for AI compute. It's a problem for hydrogen. It's a problem for uranium, for all these assets. So from that moment to today, we actually ended up deciding to focus on Derpetual, which is the underlying protocol where we're building the assets that allow different exchanges, different ways of creating these markets function, and we handed off the meme coin part to a partner team that's building token-focused exchange.
Cool.
Interesting.
Okay.
Interesting.
Very cool.
And let's quickly talk about the Thiel Fellowship. Can you talk to us about the process? What was the process of kind of like, getting in, being accepted? What's it looked like internally, for you? And super curious.
So I have to say there are two surprising things about the process. The first one is how normal it is. I would expect at some point, them. It's hard to say what I expected, but it wouldn't be too weird to say that I expected, I don't know, a brain scan.
I can understand that.
Just, answering questions, interesting conversations, and it kind of made me even more appreciative of the work that they're doing, because it seems like they have this very, very normal process, and yet it leads them to have these extraordinary results.
Yeah. Did you drop out of school, like university? Like what's the story? Like pre-Thiel Fellowship, what were you doing, and then what happened?
So I did drop out. Fourth, and the reason why was I just stopped attending.
Nice.
And it was just I had a few attempts, a few approaches, but it ended up just being something that I didn't want to trade off for working at my company, creating new things, and so on. I did make sure, not really because I wanted to, but my parents, my girlfriend, all wanted me to be able to come back. So I did make sure that once the fellowship is over, I can rejoin university, but we'll see how it goes.
Yeah. That's so
Is there any plan to go back? Probably not, right? Secretly.
No.
What did the conversation look with your parents? Because I imagine most people, even if they're having a conversation where they're like, I'm gonna.
Yeah, do they get what the Thiel Fellowship is? Do they get the fact that you're literally the first person from Poland to get a Thiel Fellowship? Second person from Poland, which is a feat in its own right. Do they understand the weight of this, I guess?
Did you have to explain it? How did that conversation go?
I have to say, I have to give huge thanks for my parents for supporting me throughout this. But I think they didn't really say anything or try to combat it. And I think they just kind of accept that I'm probably going to be doing some weird thing at every point, and they don't try to stop it. They just say yes, sure, and that's it. And I think it's
cool.
When I was 17, that was 4 years ago. Me and my co-founder started our first company, and in Poland, you can't own shares in a company before 18. So I just went to my parents and I said, okay, can you start a company for me? And I think that was the point when they realized that that I might not be doing normal things later on, right?
Yeah, that's fun.
That is so cool, man, and that's so awesome to hear. Let's talk a bit more about Derpetual and where are things at right now. And if I'm getting it right, then so you're essentially building an infrastructure that would allow people to long and short assets that aren't currently that you aren't currently able to do that for. Is that right?
Exactly. And the specific problem that we solve is that our assets, the assets that we create using our protocol, do not require initial liquidity. So if you want to create a derivatives exchange, right? You wanna allow someone and you want to allow an airline to hedge oil prices, because they worry that if oil goes up too much, they go bankrupt, or they have to raise ticket prices too much. Demand falls, they have problems, right? They want to hedge that. So they go to a derivatives exchange, and then they open a bet that allows them to profit from oil prices going up, right? So if oil prices go up, of course, fuel prices go up, so their core business loses money, but they gain money from the market. And the goal of this kind of trade is to offset everything so that their profits or losses from fuel and from oil just end up at zero. So they are protected against the downside. And this kind of market requires to create an exchange, to go to a bank or to a market maker and to tell them, please deploy $100 million, $500 million into the order book for this market. And for many, many assets, either they're too small or the production is too decentralized. So, no bank, no market maker that's reasonable will deploy this amount of money and lock it up to provide liquidity for hydrogen derivatives or for meme coins, right? And what ends up happening is when you do the math, it turns out there is like 1,000 assets in the world that this actually pays money to do, and the rest is just kind of left behind.
Mm-hmm. And when you say the rest there, like what do you, like how far wide could we go with this? Like, you're mentioning they can hedge against oil prices spiking, like can you get even more?
Yeah, you mentioned like
sort of
uranium and all of that kind of stuff, right?
Yeah, like what, how far can this go? Like, can I be hedging stuff in like my local village at home? Like how specific can it get?
So yes, that's what we want you to do. Our plan is, of course, a little bit longer, but it looks like this. We want to develop the blockchain side and add more and more on-chain assets, mostly, of course, because there is a market for that, but also because it serves as a great proof of our viability, where we can, go to someone more serious and instead of just telling them, look at our slide, like this is so amazing, I promise it works. We can just tell them, look, someone used our thing. We have, over $4 million of volume on our protocol, and it works on the craziest, most volatile markets in the world, right? So that's kind of our proof of concept, and we want to expand as time goes on. So I think our first big expansion as Derpetual, what we want to build is hedging for AI compute. Because in this market, you have both AI labs buying up these GPUs, buying commitments to use these gigantic amounts of computers. And they worry about if compute prices go up, 20, 30%, 50%, maybe they double, which they have actually, right? So it's not that that unexpected to think that would happen. They do the math and they see, okay, if that happens, we go bankrupt. And on the other side of the trade, you have people worrying about what happens if the compute prices fall. You have AWS, you have all of these smaller companies building data centers that are building like crazy, paying billions or hundreds of billions to NVIDIA, that are creating their own private power plants, right? And they do the reverse math. If the price of compute falls, which also could happen, we go bankrupt because we made all of this huge investment. And I think these are kind of natural two sides of a market. And we can, with our protocol, we can allow them to basically secure themselves against this risk of catastrophic loss, and again help the development of new technologies. Right. So that's step one. And of course, we want to expand more and more from that. And our final vision is to get a derivatives exchange license from the CFTC and have exactly what you talked about, right? The official licensed exchange for everything. You want potatoes produced in a specific country. You want to hedge against the air quality index in Mumbai. We want to list all of that, and we want it to be fully official so that every bank, every insurer, every financial services company can benefit from this ability to hedge basically every risk.
I'm curious. In the next, I don't know what the timeline is, right? And you can enlighten me. But let me say 10 years, right? In the next 10 years, what does financial markets look like if you're able to kind of hedge against different things? And I can see just like a market of like pure liquidity between everyone, right? Not just people who are kind of like versed in buying and selling stocks or the stock market, it is basically everyone hedging against one thing or the other. What does it look like for a market like that? A market's never seen that much volume kind of flow through it. I imagine it's just everything is just kind of interlinked, and there's a market like that.
So I don't think the way the markets work is actually going to change a lot, because the way people do trades, the way people price these hedges, I think that's going to stay the same, and we want it to stay the same because that gives us the ability to give people the familiar experience, and it's enough that we're doing all of these crazy things. So we wouldn't want to change too much, but what I think is likely to change is that instead of weird OTC deals or these weird non-specific deals where insurers very often do non-specific OTC about hedging potential weather events, where banks, where you have a lot of companies issuing or buying up interest rate swaps, even though they don't have any interest rate risk, but they just see it as a general hedge against a million different things. I think all of those non-specific weird assets are likely going to be replaced by some more specific markets, right? So I think what we're going to see is many financial products becoming cheaper, especially insurance becoming much cheaper and much more exact. I think, and what I hope to see is that we kind of change how a lot of these market-making companies work, where you have the smartest people in the world work at Jane Street, and their job is to squeeze 5 basis points out of everybody without really providing any, of course they would disagree, right? They have a 30-page response to why they are providing a tremendous value to society, but I think everyone mostly agrees that the value they provide to society is pretty low, and we would prefer those people to be curing cancer.
Yeah.
Having these more specific markets, these more specific exchanges, is something that still allows those people to work at Jane Street, but their work actually ends up benefiting society, right? If they instead of working on these non-specific, crazy, weird markets, if they work on predicting air quality in Mumbai, that's a great boon for environmental regulation, where you have all of those people, of course, earning their money, but also working on predicting what the quality of air is going to be, right? And same with all the other prices. So I think the first thing we see again is financial products becoming cheaper and more specific, and the second one I hope is we redirect all of this financial services craze into more socially useful, socially productive things.
Yeah,
that's so interesting.
Dude, this has been awesome.
You got to come back on. We've run out of time, but thank you so much. Congrats on the Thiel Fellowship, and keep us updated, please.
Come back on when you have more updates.
Thank you so much. Guys, have a great day.
Good
Cheers,
stuff.
thank
Great
you.
to meet you, man. Quickly, before we have our next guest on, Framer, build better sites faster. Go to framer.com/ETN. Next on the show,
Dr. Andre from Earlybird with some news as well. I'm not going to break the news. They've already broken the news, but we'll hear it from Dr. Andre. Andre, how are you? How are you doing?
Oh, we can't hear you. Hold on, we can't hear you.
Oh, it's our fault. No, we can now.
Oh, it's our fault. My bad.
Congrats on the news. I saw it break earlier today. Do you want to maybe intro on yourself first, for those who don't know who you are, but also, we can bridge into the big announcement that Earlybird has put out today.
Sure. Thanks a lot for having me. I'm Andre. I'm one of the 5 general partners at Earlybird, and the big news of today is our new early stage Fund 8, which is the largest Earlybird fund in history. So we've been in the market for almost 3 decades now, and we've just closed a new 360 million euro fund to back European tech champions.
Let's go, man. Okay, so first question, what is the core thesis and focus for you guys with this money? What industries are you most interested in? Is this evolving? Like what's happening from the Earlybird VC standpoint?
Look, I think European early stage venture has changed a lot. When I joined the industry a bit less than a decade ago, it was mostly generalist funds investing all across the spectrum of topics. And one core reason why I joined Earlybird, like I'm an engineer by training, computer science background, spent a couple of years in the corporate world. So I was really an operator for some time, went back to university, did a PhD, machine learning applied to VC. So I really have a technical background. And the reason why I only sent one application back then to Earlybird was really that Earlybird, in terms of the portfolio, was probably 80-90% really tech companies, B2B, and really technological innovation, versus many other funds invested more into business model innovation, which is also fine, but not where I feel home. And I think that also translates into the team. So if you look at the Earlybird founders, also a PhD in aerospace engineering, industrial engineering. So we have built out a very technical team and also deep expertise. And this is what we translate into the portfolio. So to your question, in all honesty, not too much has changed. I joined Earlybird a bit more than 8 years full-time then to build out the AI investment practice. And we've been investing in these areas for long. We've been investing for long into deep tech hardware. So companies like ISA Aerospace, Marvel Fusion, which is as deep tech as it gets. And then the layers on top, which is the software infrastructure foundation model. That's the practice that I'm leading, where we've invested in companies like Aleph Alpha, Black Forest Labs, Spatial, Slang. So all across the modalities, and then most obviously also on AI applications. So we continue investing also in AI applications. But the question is, how can you build out very defensible businesses on that side that will not disappear in 3 months from now?
Yeah. And what do you think about that, right? We're seeing every time Anthropic drops a new demo video on X, like we're seeing public companies, publicly listed companies stock price shake, right? Everything seems maybe too sensitive right now. Would love to get your take.
Look, I think a lot has changed. If you look back then, there's an interesting academic concept actually, which is about the cost of innovation. And the cost of innovation, you've seen different kind of step functions over time. So for example, when the personal computer was introduced in the 80s, 90s, there was a step function and made it easier to start a new business. If you look now at the transition of cloud, the introduction of cloud made it easier to start a new business. Mobile made it easier to start a new business. So through all of these technological step functions, it becomes gradually easier to start a business. And I think what has changed through now the advent of AI is really that the cost of generation has come almost down to zero. So I think if you look 5 years back, it really took a leap that you as an entrepreneur needed to build out the team first and then really put your vision into a product that oftentimes took like 12, 24 months or something until you could even test for product market fit. And I think today with AI, you can just spin out something over a weekend and really test the value proposition. So this value proposition market fit is something that's way easier to test. And that's also why we see the market as incredibly noisy. So I think if you look at the application layer of companies, there's a strong shift between can teams actually pull off the product and really find product market fit towards can they actually stand out and really get the distribution. So I think there's now a very strong focus on distribution, founder branding, team branding. You guys know it better than we do, new media. So how can you actually play new media as a company to really get the distribution and stand out to gain customers?
That leads me on to a question that I wanted to ask. How has the raised kind of like the metrics changed, right? With what do you guys look for? You kind of mentioned it a little bit, but let's go deeper, right? It's kind of shifting, right? There's so much noise out there. What are you like specifically looking for in founders when you're backing them now?
Yeah, I think just to stand ahead, so we continue to invest at the earliest stages. As the name Earlybird suggests, this is our history and this is really what's the core of the business. Sure. We invest between pre-seed to Series A. And obviously at the pre-seed and seed stages, you rarely have commercial traction. So if we now look at the different kind of factors that we invest into, and we categorize our team and investment focus by, on the highest layer, we have AI applications, and AI applications really goes after different kind of sectors or kind of departments within a company. Then we have the software infrastructure foundation model practice, and then we have the deep tech hardware practice. And I think depending on these practices, we look for completely different things. Mm-hmm. What the deep tech and hardware practice have in common with the software infrastructure and foundation practice is that we look for very strong research background in the founding teams. Sure. So if you look, for example, the companies I mentioned before, Black Forest Labs, Robin and the team, they have a very strong background in diffusion models. They are actually the inventors of diffusion models. So we are looking really for this pedigree in research background there. That's also true if you look into other companies. Spatial, which is another portfolio company also of the new fund. Matthias Niesner is one of the 4 co-founders, and he was a professor in Stanford, then at TU Munich. He co-founded Synthesia, and now this is this new company that we were very lucky to partner with last year, and they just shipped the new 3D world model actually yesterday. So this is really kind of teams that we are looking into, and the same is true for ISA Aerospace, Marvel Fusion, Greenlight, all of these companies. So very strong focus on research, deep expertise. If we look at the application layer, it's actually different. For the application layer, we look, number one, for very deep domain expertise. So people who know the workflows and sectors in and out. Like if you're selling to OEMs, if you're transforming accounting, back office, we're looking for people who really understand these processes, ideally as an operator. And that coupled with, I don't want to age discriminate here, but let's call it a Gen Z kind of product mindset. Someone who's AI native and who does not think about the limitations that traditional software had, but really think about it from a first principles, AI driven. And this is what we're looking for as a balance in these AI application layer companies, really product minded, AI native, but also doing like a deep understanding of the sector and the departments that they try to disrupt. That's a bit of what we're looking for in the very earliest stages. And I think then if you talk about Series A, like, man, the metrics are completely all over the place. Last year, we backed a company that was just 10 years in the market, a company called Sintra AI out of Lithuania, bootstrapped 10 months, 10 million ARR, profitable. So we were very lucky to also win this competitive process and continue working with the partner company ever since. And they've been skyrocketing from there. So it would be dumb to say at Series A, like what we did, say 5 years back, you want to see this magic 1 million ARR, because today it can be anything between 1 million ARR if you look more into the technical side of the spectrum. But application layer companies, we sometimes see 10, 20 million even at the first round of funding, which is the seed in their case.
Yeah, that's insane. Moving a little bit on to you actually published an essay, The Agentic VC Firm Isn't the Future, It's Now. This is in some way relating to like positioning VC firms as like augmented VC was a term that I saw. Can you maybe break down a little bit of like how is the traditional VC firm changing today, right? We have a bunch of conversations with enterprise CEOs and they're all trying to get their teams to adopt AI, but I don't think we've ever actually spoken to someone who, you know, on the VC side, like how are you guys doing it? What are you guys like? How are you finding a comparative edge?
Look, very personal story on that. As said, I'm an engineer. I'm really like by education, very analytical, trimmed to efficiency, automation. And when I did my first step into VC as an intern back then, in parallel to my research, it was the most exciting thing that I could imagine, like working with the most passionate, skilled, like strongest people I've seen all across, from the LPs, our internal teams, the portfolio, amazing. But on the flip side, I really could not believe that these smart people would work like that, like mostly doing monkey work, sitting in the Excels and typing stuff all across, super manual. So I was shocked. I was shocked what was the status of how this industry was working. So I took that as inspiration. Also, like my PhD was really on machine learning applied to venture capital. And when I joined Earlybird as an investor, I really started to build out my own personal stack from first principles. So I started really with an automation layer, which was back then Zapier, for example. We actually were one of the very first customers of Affinity, which is a VC-focused CRM system. So I really built out this stack step by step, built my own scrapers and so on and so forth. And by 2020, the team asked me like, Andre, can we also access the stack? And I said, look, I come more from the data side of things, data automation part, not so much on the web app. And back then, there was not like AI native console, you can interact in natural language here. So I essentially took that and hired the first full-time engineer at Earlybird a bit more than 5 years ago. And we built out an engineering team, which at the peak was about 8 people. Now we reduced it a bit, a very senior engineering team. And I think we've completely transformed the way how we work. We compressed the time from first signal identification of a company to first meeting and really be well prepared. So whenever we get into the meeting, we have already done the work and we can speak eye level with the founders. So that's a bit on how we think about it. Obviously, we need to continuously rethink how we approach it. So I mentioned back then we built a web app. Now last year, as you could see, the advent of ChatGPT, Claude, and so on and so forth, we also thought about what's an AI native way of working that. So today, everyone in the firm works with Claude skills. We have different kind of MD files. We have shared skills across the firm. So I think private market investing, not only for venture capital, but also private equity and LPs, family offices, will completely transform in the next 24 months. Final comment, you mentioned the augmented part, and that's something I back then put out as a description of what I believe into. I think, yes, we leverage AI as a superpower, but eventually the humans will stay in control. If you're a lead investor, you need to connect human to human, because eventually if shit hits the fan and you're a board member, the founder does not want to call an algorithm. They want to call humans, and you need to build this relationship in a very long term. So I truly believe there can be purely quant funds for follower funds, but if you're lead or co-lead investors, this human relationship will not disappear in the next 2 years and also in the 10 or 20 years. So I have a strong belief for this augmented VC.
Yeah, I want to go deep on that, but before we do that, we actually only have 1 minute. I wanted to ask, what does a first signal normally look like, and has that got got earlier over time as you've been building this tech stack? What does it normally look like?
So we've looked initially at incorporated companies, and essentially you look at all of the databases. Back then we incorporated Crunchbase, D-Room, PitchBook, PB Insights, and so on. Actually, there is these databases start to overlap more and more. So we reduced the number of databases we need. So today we use, for example, Harmonic, Evertrace, and we combine a few. And then we complement it with individual signals. So for example, for us, investing a lot in tech, grant databases, different kind of research databases where you publish papers, GitHub, Product Hunt, all of this stuff. And you unify that into a single source of truth. And what I can tell today is that and we measure all of that, like we're not just telling stories. We can see that we have 96% coverage all across Europe for companies and self-founders that receive funding by funds that we deem a relevant fund or competitor. So we excessively measure all of that to see we need to identify all opportunities top of funnel, but then we need to get into the scoring, and the scoring is the interesting part, because that can be deterministic as like, was at this university, has spent some time at this company, but it's really a mix. Like if you look into a core fusion company, you look for completely different backgrounds than if you look, for example, into the next kind of AI accounting company.
Mm-hmm. That's insane. We are 1 minute over. Do you have to go? We've got a little bit more time, but
I have some time. 15 minutes left.
Oh, cool. Yeah,
just one more question from me. I'd love to know, because I think you've got a unique experience that combines like a background in like technically in what's the most popping thing right now, AI, but also this sort of balance of VC as well. So you must see a lot. You must speak to a lot of people. What's your like hot take right now with AI? Like we were looking at the earnings calls earlier today from like massive capex investments across the Mag 7. Right? Some of the stocks were reacting negatively to these numbers that were coming out, even though revenue expectations were beat. Some of those stocks were reacting negatively. Have you got a hot take for us right now with all this going on? Like, have you thought about this? What's your thesis? What's your thoughts?
Like I would try to zoom out from a quarterly basis and really look at the evolution of technology and what that means. If we look back, we have November 2022 when ChatGPT launched. I think that was mostly the kind of epicenter of it. I would look at the year of 2023, partially 2024, as the kind of exploration phase. Then starting within 2024 and clearly in 2025, we had the build out. So we started infrastructure build out. Everyone asked the questions like, how can we ever monetize and pay this money back? How do you need to write off this infrastructure? How long can you use it? All of these questions. Yeah. And I think we are now advancing the peak phase of this build out. If you look into all of the top companies, Amazon, Meta, Google, and so on, I think they've committed a collective 700 billion in infrastructure scale out within the next couple of 12 months plus. And what I think is now shifting on the shareholder side, and specifically the public markets, is really the value capture. So it's a big question now in terms of accountability. So zooming out 2023, this is like the year of exploration. 2024, 2025, partially 2026 is like the build out. And I think we are now at the peak of build out where all of these commitments were made. And now I think we start transitioning into a phase of accountability where shareholders are really looking into, can you actually capture this value that everyone has promised and invested into? It's like an advanced investment, and can we actually capture and bring that value back into the companies? So that's my view at it. I don't look too much of it in terms of daily ups and downs. I personally don't care too much, but really focus on the fundamentals, as we mostly do in private market investing. We look very long term. But I'm incredibly excited. I think there's a reason why you see these efficiency gains. If you look at tech industry collectively last year, the output has increased. I think depending on the measures, 10 to 13%. If you look at the number of headcount required to drive this output increase, it got down by whatever 10% something. If you look across all of these layouts collectively and so on and so forth. So I'm personally very excited, and it frees up lots of capacity that we can reinvest in like fundamental disruption and innovation again.
Yeah, sure. I didn't realize it was down 10%, the amount of
That's so cool.
the headcount.
People are getting leaner, more efficient. We love it.
It's cool.
You always just see the headlines, but if you look at the numbers collectively, there are different stats. So it's quite interesting if you calculate the compound efficiency gain in terms of output input. So worth taking a look.
Hell yeah.
Yeah,
Dude, that's
100%.
awesome. We would love to have you back on. This has been fascinating. Just to talk generally about this kind of stuff.
Totally. I'm here. You know where to find me.
Amazing. We've taken 5 minutes extra of your time, so we'll let you get back to your day. But thanks for joining us, and congrats again on the new fund. Super exciting, and yeah, Europe is thankful to you guys.
Totally bullish on Europe. Thank you guys. Thanks for everything you do for the ecosystem. So let's push this ecosystem together.
Indeed.
Talk soon. Ciao.
Good stuff. Ciao. Awesome stuff. Base, the infrastructure for the on-chain world. Go to base.org. So we've got 10 minutes before we have our next guest on.
Yes.
Marcus at BMW
I want to go back to The
Ventures.
Verge.
The Verge.
The Verge was giving us examples of evidence brought up in the Musk OpenAI trial.
Go.
So we did exhibit number 7. We will now go to exhibit number 12. So in a November 2015 email exchange between Musk and Altman, the two discuss plans for the forthcoming AI lab. Musk starts off by recounting a great call with Greg Brockman, that is in quotation marks, by the way, and saying he's, in quotation marks again, super impressed with everyone so far, calling it a great team. He suggests creating the lab as an independent pure play 501c3, but with a crystal clear focus on the positive advent of strong AI distributed widely to humanity. He says the company would still aim to bring in revenue in excess of cost at some point, but positive net revenue would just flow to cash reserves. With regards to compensation for employees, Musk suggests a cash salary and certain bonuses. He says that if Altman is amenable, employees could convert cash to stock in Y Combinator, adding that it's fine if they'd rather convert some or all to SpaceX stock instead. I can pretty much do what I want on the SpaceX side, as it is private. Thank goodness, Musk writes. It's not going to be for much longer, pal. So nuts. He also offers insane amounts of real-world sensor data from Tesla for the AI lab to use, mentioning that the amount of data is several orders of magnitude greater than any other company. Musk's first stab at a name for the AI lab is FreeMind. As he says, it conveys the sense that we are trying to create digital intelligence that will be freely available to all, the opposite of DeepMind's one ring to rule them all approach, in quotation marks. It's so nuts how back then, like I know we spoke about this with Sebastian, but DeepMind, like part of OpenAI's like, I guess, marketing ploy in the way to position itself against DeepMind as like a competitive lab was to frame it as the evil AI, like corporation owned, like Google owned, like, you know, they're holding AI for themselves, and it's just so.
Yeah, you've been super fascinated about the inception of OpenAI was meant to be the for good.
It's just that you couldn't write it. Right? It's like a Shakespearean novel.
And now it's kind of completely flipped, and Demis has come out as the one that truly cares about.
I don't think I've ever seen anyone like talk bad on Demis.
No,
like he's never been up to no good.
No.
I can't remember a single thing.
And now you've got Silver raising, $1.1 billion, the biggest seed round in European history, and all of the videos of him on all of the interviews and all of the kind of profiles of him are like great guy.
We
love this guy.
Would have a beer with him.
Yeah.
I mean, I'd have a beer with all of them, to be fair, but it should be funny.
Wouldn't have a beer with Sam Altman.
I'd have a beer with Sam Altman. I'd definitely have a beer with Sam Altman. I mean, that'd be funny. That'd be what did you do last week? Just knocked a few Guinness back with old Sammer boy, That'd be quite fun.
Talks about Musk and it got a bit round.
Got a bit deep. This was exhibit number 12. That was kind of a long one. This is so exhibit number 16 seems to be a bit of a shorter one. We're seeing these live for the first time, by the way. OpenAI officials. Official articles of incorporation filed December 8th, 2015. The document states that OpenAI quotation marks, shall be a non-profit corporation organized exclusively for charitable purposes, and that its purpose is to ensure that artificial general intelligence benefits all of humanity, including by conducting and or funding artificial intelligence research. The corporation may also research and or otherwise support efforts to safely develop and distribute such technology and its associated benefits, including analyzing the societal impacts of the technology and supporting related educational, economic, and safety policy research and initiatives. So this is all getting brought up in core. There were a few more comments around how Musk is jousting with the individuals who are asking him the questions, like the lawyers that they've put in place. I found a really funny tweet from Logan Brown about Logan. So Logan actually initially it is a retweet of Nick's tweet first, so we can just have a look at this. Nick has an ongoing thing with Sam Altman and OpenAI, which has been really fascinating and funny to follow. But this is essentially a conversation between Musk and OpenAI's lawyer.
Is that Sam in the drawing? The guy on the bottom right?
I haven't scrolled. I'm showing my screen, so I'll
Why
come
does
to
he look
that.
so surprised?
So this is William Savit, where Watchell Lipton's lead defense lawyer, Supreme Court clerk, trained to break witnesses. This is from Nick. Savit opens with a misleading premise. Musk, you're being misleading. What you're saying is false. Savit tries again with a different loaded frame. Musk, your questions are not simple. They are designed to trick me. Savit demands a yes or no answer to a complicated question. Musk says, if you ask a question where there is no possible simple answer, I must give a longer answer because any simple answer would be misleading the jury. And this is when Musk comes into his flow. Musk reaches for an analogy. The classic answer to a yes or no question is not so simple. For example, if you ask the question, will you stop beating your wife? Judge Gonzalez Rogers cuts him off. No, we're not going to go there. The courtroom laughs. Savit apologizes for the question. Musk says, I find it funny you saying it wasn't an unfair question since you're only asking unfair questions. Savit says, I'm doing my best. Musk tells him that is not true. And Nick finishes off, OpenAI's lawyer came to break Musk, but Musk wasn't having it. And then Logan Brown retweets this and says, Elon lawyer stories are my absolute favorite. He hates them. Fair. Every store or interaction between him and a lawyer is amazing. In his Twitter depo, he didn't know who was suing him. Thought the lawyer was the plaintiff. In the depo, he went off on many tangents, including an observation that even if something looks like a donut, could it be a bagel? And an intricate description of cat memes. Cooley hired the SEC lawyer that investigated him for his 420 remarks. He threatened to fire Cooley as counsel across his companies. They didn't fire the former SEC lawyer. So for Musk to joust with these lawyers, it is not a new thing. He does like to. He's a man of fact, of logical sense. Usually in these types of conversations where, he's very okay with having a conversation and completely breaking down all societal norms of where. Maybe someone would typically avoid conflicts. They'd probably try and diffuse the situation quite quickly. Musk will sit there and wait to bring out the truth, as painfully socially excruciating as it may be. And there's a great conversation he had with when someone's telling him about how Twitter, as he was buying it just after the acquisition, I think, and a couple months into him running it, he's having a one-on-one interview with a reporter, and the reporter's saying, I've the Twitter's full of misinformation, how are you combating this? And he was like, what information? Can you
Tell
name
me. Give me
examples? Yeah. And he's like,
yeah.
And he's like, so
if you can't give me an example.
Yeah. He's like, give me one example. And the guy's like, I don't know off the top of my head. He's like, so why are you saying it? He's like, so you lied. You're a liar. And the guy's just you can feel, when I'm even watching it, I'm kind of scrubbing through it, oh, this is making me cringe.
It's that one that's it looks over the Tesla factory.
I think they're, yeah.
He does a lot of
Aussie? I can't remember if he's an Aussie reporter.
He is an Aussie reporter, I'm pretty sure.
Yeah.
Or he's English. He's one of the two.
Maybe he's English, actually. Maybe
I think he's English. He's English.
Yeah, who was the recent Aussie reporter who went, oh, the clavicular. That was it. And he's like,
Yeah, that was good.
You're a giga far away.
I can't
so
see
funny.
you. You're giga far away.
He's like, are we looks maxing right now? That was such a joke interview.
so good.
But that was from Logan Brown. Just want to share that. Thought it was pretty funny.
Indeed. Before we have our, we have an next on Marcus at BMW iVentures, yeah, he's coming on in 1 minute.
They've just raised a $300 million fund 3.
Yes,
I believe.
I think so.
Is the news that came out this morning? I think that was broken. Marcus is a return guest to the show. Very excited to jump in with him and catch up. It's been a couple months. I think he last came on January or February. I think it was this side of this year. I think they were announcing something else back then. But yeah, going to be good to catch up with him.
Indeed, he was cool. I really liked him.
Following that, after Marcus comes on, we've got a bunch more interviews. It would have been nice to get to the billionaire guests at the White House.
Yeah, I think we're going to miss that, unfortunately. But, that was the game.
Should we just start now?
I mean, we could. We could try. Let's try.
Squeeze
Let's
it
just
in.
do it. Let's just do it. We can go through the list quickly.
So these
but at least
were the
10 billionaires dined with British King Charles III and Queen Camilla at Tuesday's White House state dinner amongst a guest list that included...
Time's out.
Oh, okay, we're out.
Time's out.
We tried.
got Marcus coming
behind with
into the
Airwallex.
show right
Go to
now.
airwallex.com. Marcus, can you hear us?
Yes, I can hear you.
Welcome back. It's so good to see you again.
Thank you. Yeah. Well, it's a great honor to be.
No.
Again.
It's our honor, and you've got some amazing news to share. Do you want to maybe tell everyone what this news is? We've given a slight intro, a slight teaser, but it's probably better coming from you.
Oh, of course. I'm happy to, and thank you for having me. And it's always good to have that kind of occasion to come back. So actually, we're proudly announcing that BMW has confirmed that BMW iVentures will have a third fund. So we are now a third fund generation now. We started in 2017, Fund 2 in 2021, and now in 26 we have Fund 3. We have a $300 million commitment from our single LP, and we'll just continue investing in this incredible, interesting space, and we will focus mainly on the focus areas that we had before, in the addition with AI. So we're looking into how is the world transformed by AI and what can we actually learn from it, and what are the big endeavors that are starting there, right?
That's so cool. So awesome to see. Congratulations. It's so awesome. And a third generation just shows, performance must be going well. How is the appetite then from LPs? Like, what are they thinking? What are they trying to just like, they're seeing such an amazing opportunity. They'd love to be a part of that future value. How can we work within this new emerging technology? How are the conversations going on your side, on that upper echelon?
Yeah, so first of all, I think it's a great commitment to see the consistency, right? Mm-hmm. So in this very struggling environment right now for classical companies, let's say, especially in the automotive field, we see a lot of headlines. I think it's a really, really good commitment from BMW itself to say, from the BMW group, to say we want to continue this journey. And it also, you're right, it speaks to the success that we had in the past. So what we did when we discussed with our LPs, so to say, the new orientation of the fund, the new investment targets, we of course came across what has changed from the former years, where are the trends going. So we might focus a little bit more, as I alluded already, into these transformative technologies that are coming up using AI, be it agentic AI, be it physical AI, be it process engineering that you can elaborate and actually accelerate. So humanoid robots or specialized robots using AI training, AI modules, AI frameworks will be of a lot of interest. Then you will have a lot of agent or agentic AI agents in our workflows that will help us to do better, faster, with more quality, and achieve more with the same team and in a much shorter time.
Yeah, super refreshing to hear. You mentioned something there like robotics, like from from it's a great sign that BMW as a whole, as a conglomerate, is leaning into innovation. They need to be a part of this, and it's good to see that they're deploying a sensible amount of money to be at the frontier of this, comparatively maybe to others. In my mind, when I think back and I look at maybe like the automotive industry as a whole, the most exciting part of that might be this intersection of robotics and AI. Is there a particular area that you guys are quite excited about, that you can see natural crossovers coming in on, not day one, but like working closely with these technologies? Is there a specific area that BMW is like, oh yeah, that one's right for us?
So, yeah, well said. I think it is especially robotics that is very applicable to us as a production company we're producing 2.5 million cars. There's larger OEMs out there, but they all have plants that have a similar output.
Yeah.
They just have more plants, right? So and there's a lot of automation in there already. Everything you could automate with the old traditional rule-based automation. Now we're coming to a point where we're actually able to automate things that are much more complex and that need what we call as a human intuition, but it's basically a decision-making process based on experience and learning.
Yeah.
And now we have found, or out there are the tools that are developed right now, and we hope to find them soon, which will enable this in many more places. And so, for example, we already started in our fund too to, for example, invest in this Swiss company Embotech that uses a combination of AI algorithms and classical algorithms in order to do autonomously drive in our plants the vehicles, right? So they're not relying on the state of the assembly of the vehicle. It's more, you don't need any internal sensors. It doesn't matter if the car is highly equipped or low equipped. They just are able to drive their car off the end of the line towards the parking place. And they're using these kind of technologies that are emerging now. And that's the big difference. So this is, imagine in the past, this was a job somebody had to hop into the car, drive it out to the parking lot, walk over to a bus station, wait till some bus picks all of them up. They go back into the plant and they drive out again. Right? Yeah. So it's not really a job you're wanting to do. And they were rotating, of course, doing more interesting jobs than now this.
Sure.
And now you can focus more on the purely interesting jobs, and you can automate these non-really helpful tasks, right?
Yeah.
Yeah. The second thing I think is what we can really improve is quality control. We're seeing that with AI, you can much better control processes. So nowadays, you're assembling, and then you have a quality gate, right, from the classical production systems. AI will help us to fix it right first time, by just coaching, assisting, and helping the worker to do the right things. And then you don't need to go through a quality gate where you might have to disassemble a part of the car again to fix what was wrong and then put it back on. So those are areas that are very interesting.
What are the timelines for actually bringing something into the production kind of line, if that makes sense, right? What are those timelines? How long does it take for something to be introduced and then to be in full force on the production kind of timeline?
Good question. There's not an easy answer. It very much depends on if you're really intrusive or if you can just piggyback, right?
Yeah.
So if you're changing production line process flows, then it gets kind of difficult because you've invested, you've bought all your tools, all the machinery, then it gets difficult. But if you can piggyback on an existing, so drop-in solutions, those actually in production go very quickly.
Sure.
If they show the benefit, if they show the safety addition, the quality addition, then you get them in fairly quickly. You might have a POC, and then you have a second POC at a different position, and then you start rolling out. And then also what happens very easily is you have one lead plant that actually initiates or brings these innovations forward, tests them, gets them to a maturity that you can then take, and then you roll it out to the other plants very quickly.
Yeah.
Very difficult or different if you want to actually get into a production car, right? So there you have a lot of lead times, as this is a product that will not be supervised by us, but given to customers' hands. Oftentimes those sales cycles are much longer.
Yeah.
But still.
Yeah, no, that makes sense. And maybe a good segue as well. A question with regards to the fund and its deployment, how how does BMWI Ventures work? Like in my mind, is it that you'll make an investment in a company, maybe it's early stage, maybe it's a bit later, and potentially there's elements here for maybe design partnerships. Do you let them in and they can work with BMW? Will you say like, oh, can we test some of this? And how does that relationship work? Is that something that you guys are thinking about? Or?
Yes, we are. We're thinking about this, and that's very, very important to understand how we operate together with our mothership. And therefore, it's a good question because I'd like to explain this. Awesome. So we're actually an independent fund, right? We have a single LP, we get a capital commitment, but from there on, we are investing in the companies that we deem are financially viable and also bring some benefit to BMW.
Yeah, sure.
We don't need to go back and ask a business unit, or we don't need to go through all the loops and hoops that you do usually if you do investments from such a large company.
Yeah.
The reason is we want to be agile and quick, and we want to be as fast as institutional VCs, and we are taking the same risk, right? So we're taking a full VC risk. Mm-hmm. And that's the big benefit. We also have this big company in the background with 10,000 plus engineers in development, 10,000 plus in production, who we can draw up on, who we can go to and talk to and get an expert opinion, but without obligation. So we're not saying we found this company, you have to work with them. Yeah. We are saying we are looking at this company. What do you think? And then they can give us an honest opinion. And oftentimes it's interesting, but very early. I have to fix a car. Let me work on this. So we get this opinion, and then we do something with it. And if we're positive, we invest in the company, nurture the company, grow the company, bring it back if it's mature, and say, look, you gave us this advice back then. Here's the company. Do you want to work with them? And it's all on a volunteer basis. Yeah. And we have examples where this works extremely good. And of course, as a VC, we've been wrong, right? We've invested in companies that were not of interest to BMW. But we still try to grow those companies and scale them and help them find other customers. So very important that this independence works out to the best of everybody.
Yeah, that's a really cool setup.
I'm curious about the kind of more general, like venture as an asset class, right, is becoming more or like less niche than it was historically, and is in the eyes of the public a lot more. These private companies are getting larger, and venture companies are in the public eye more, all of that kind of stuff. Are there more companies like, or relationships where you've got, as you mentioned, BMW as a large company and then almost like an independent venture arm of that company? Whether they're independent or not, you kind of see more companies doing this, right? They have larger ventures. They're a large company. They have a venture studio. Where do you see like that kind of thing going in the next, in the future? Do you see venture becoming like an integrated part within, I guess the business function type thing? Does that make sense?
It's kind of like an R&D extension, right? Maybe.
So I'm a big advocate. I think that's the right solution. If you're a company of a certain size and you're especially in technology, or on a leading edge of services or something, it doesn't go for most mom and pop shops, right? They do good business, but for them probably it's just a different scale.
Yeah, of course.
But for large corporations, especially in the field of technology, be it healthcare, be it tech, whatever, I think this is the way to go. You need a venture unit. You need a unit that will help founders with great ideas grow and nurture their idea. And the good thing about the venture aspect is, or let's put it this way, BMW as a company, as a corporation, especially in the automotive space, is a no failure company, right? If you start a project, you better succeed. Otherwise, it's not good for your career. It's not good for you.
Yeah.
In venture, it's different. We want to explore the unknown, right? We want to explore crazy things, and maybe 8 out of 10 don't work. But the other two really scale, or let's say 4 don't work, 4 are mediocre, 2 are really good. And because you need a different attitude to do venture, 100%. I think you have to take it out of the corporation, institutionalize somebody that has a license to fail for these matters, and then explores together with creative founders, with other risk takers, these edge cases. And some of these edge cases become very successful. And then there's the big help from the corporation that can then say, okay, we thought we were on the right track, but there is another niche. Let's cooperate with them. And this also helps you to find disruptive technologies early if you closely listen to the market.
Yeah.
So I'm a strong advocate. And let me add this last point. We like to cooperate with other venture firms from other corporations. So we have plenty of investments together with Toyota Ventures, with Porsche Ventures, with Volvo Technology Fund. So other industries like Airbus Ventures, and also institutional investors, because we all can bring something very unique to the plate and then help those entrepreneurs really strive for their solution. And hopefully it works out.
Yeah. That's really cool. 1 minute left. A question for you, more of a fun one. How's your day looking like at the moment? Like, what's the day setup now? Is this going to change everything for you? Are you now going to have to be, meeting founders 24/7? Like, what does it look like at the moment?
We were working very strongly towards this announcement, and now the announcement is out. Now my mailbox gets really full because more people have heard about us, which is even better because we want all the inbound to actually look at all the opportunities out there. So we will be digging into our deal flow and actually work from there. My day is very much determined by that. I work a lot with our US colleagues, so I start easy in the morning. I get running up during, let's say, early morning or early noon, over noon, and then long time in the evening. But most of this is just discussing either with founders, looking into financial models, looking into technology, talking to engineers. So I'm very much in a back-to-back situation with meetings, looking into this. But I'm very much looking forward to get a lot of great people with good ideas coming to us now.
Yeah,
awesome.
No,
That's
exciting.
so cool,
It's exciting times for you guys. And thanks so much for spending the time. We appreciate it. And we will see you soon.
Congrats as well.
Thank you so much. Hopefully we have a reason to see you to come soon.
We hope so.
For sure.
We hope so. Cheers.
Ciao. Before we have our next guest on the infrastructure for the on-chain world, go to base.org. And we have Paddy Lambros on the
next, coming in hot off a 5.3 million seed round. Paddy, can you hear us? It's going very well. Welcome to the European Technology Network. It is a pleasure to have you, and you've got some exciting news. Do you maybe want to break it instead of me breaking it? I mean, it's already broke, but maybe you should introduce it to us instead.
Well, thank you very much for having me. Really appreciate being on. So the good news is we've announced our seed round led by Notion Capital. So we've raised 5.3 million. And alongside Notion on that round are A16Z speedrun concept and a whole host of really fantastic angels. And we're really, really excited about it.
Let's go.
Let's go.
A couple of like powerhouses there, for sure. Do you want to maybe just explain for the viewers and the listeners at home, break DEX down? I mean, obviously we're aware of what it does and and how things are going, but maybe just break down core product, thesis. What was the problem you were trying to solve? We'd love to hear more about it.
Yeah, absolutely. I've spent the last sort of 12, 13 years working in recruitment, predominantly in startups in the UK, worked for companies like Improbable, Sensat, and then I worked for a venture firm called Atomico for a few years and supported hundreds of companies across Europe on hiring over those years. It is the biggest problem that every company faces. If you look at every breakout company of the last 100 years, they've always been known for exceptional talent. It doesn't really matter how far you go back, that's always been the case. And that is the perennial problem that every business is trying to solve, having the right person in the right place at the right time. And there's been a lot of attempts to try and fix this problem, whether it's sourcing tools, email automation, scheduling, you name it, it's been tried, but no one's cracked it. And I think the reason that no one has cracked it is because they're trying to solve for the wrong audience. They're trying to solve for the hiring company and not for the person who's looking to find the right opportunity. And so we position DEX as an agent that works on the behalf of the individual, that helps them understand what they're looking for, helps them understand what's available to them, and then helps them connect with the companies for whom they're the best fit. Right now, we're starting with software engineers, predominantly in the UK and sort of remote around Europe. And we're seeing really good traction there with some of the best technology companies in the world where they really are looking for that needle in a haystack talent. And that's where we focused ourselves over the past sort of year or so.
Awesome stuff. Within that, the first question is obviously a wise choice to choose like software engineering first. It's a very hot market right now. Everyone's after that, and we've just seen like insane salary benchmarks getting traded from some of the Mag 7. Is there is there a trend that you're seeing like on the back end in terms of signups? Like, is it other job roles trying to get into this thing? Is there more demand for like outside of that software engineer space? Like,
we've had a lot of requests for us to look at non-engineering roles, and we've rejected them. And right now we've really want to zero in and focus on that segment of the market. There are incredible tailwinds for engineering talent right now. Globally, the internet makes up 17% of GDP. I'm pretty confident that number is going to rise over the course of our lifetime, and the demand for software is going to grow hugely in that time. And so, we're very bullish that engineering as a discipline and software as a category is got a long way to run. We have seen since we started Dex, the average salary for the roles on our platform more than double over the course of the last 12 months. We no longer really try and focus in on sort of the very top companies. And so the salaries on the platform range from 100,000 at the low end up to about £1 million for individual contributor software engineers.
That's sick.
no way. So there's some of these people that are signing up to Dex and they're landing these jobs, they're getting $1 million pay packets.
Yeah, it's crazy.
That is insane. That is insane.
I remember trying to hire I remember back at Improbable in 2016, trying to hire senior engineers on like 90K. And it's just, for the segment of the market that we operate in today, it is so challenging to find top talent that the salaries really are incredibly competitive. And the arbitrage between SF or London is diminishing every day.
Yeah. I think multiple conversations seems to be trending that way in terms of like top tier, top like 3-4% is just like set in stone. And then you kind of have this like next batch that's like slightly arbitrage between SF and UK. But yeah, as you say, like
what's the trend? Obviously, it's closing. Like, how quickly is it closing? Is it kind of, every month it's like, oh wow, like, it has closed considerably. Like, and what's the arbitrage now? Like, what's the difference?
I'd love to see more broader data. Obviously, like there's the Ravios and the folks of the world that do some of this, but in that top sort of 1 or 2%, I would say that like we're getting close to parity. It's obviously kind of, there's a long tail and there's a lot of people in there that are slow to catch up. But in the top companies, many of our clients, they are going very aggressive. They are looking for the very best talent. The expectations are incredibly high, but so are the rewards.
Yeah. And then can you maybe like break down a little bit more on the product side of things? So you mentioned it's focused on consumer side, like helping them. So I sign up to Dex. What's my UX? What's my user experience from end to end?
Yeah, absolutely. So you sign up to Dex today, and we have a conversational AI that takes you through a bit of a get to know you, a bit of an onboarding, and that's really looking to understand, what are you doing today? What is it that you're looking to do in the future? What are the things that you enjoy as part of your work? Obviously, we feed into that any information you provide it, your LinkedIn, your CV, anything else you want to provide. And from that, Dex, our agent, through either voice or chat, will look to understand kind of what would be the right fit for you. Once it's kind of asked a few questions and got some insight there, Dex can then show you roles live and take you through them, explaining what the company is, what they do, who founded it, who the investors are, what's really unique and interesting about that role. And that's a fully agentic experience. The idea there being that, a really good recruiter might know a dozen companies and be able to speak to 20 to 30 people in a week. And I'm being generous there. In the last 2 days, Dex has spoken to over 1,000 software engineers based in the UK. And so, if you think about the kind of scale that we're able to achieve, we've got more than sort of 60 tier 1 clients on the books at the moment. We turn away more than double the amount of business that we take on. We're very, very selective about the kind of companies that we onboard. And then we look to sort of introduce the very, very best talent to them. So you come through the product, have that agentic experience, really try and discern what are the 2 or 3 opportunities you should be considering, rather than just presenting you with a load of stuff. It really is about kind of slimming that down and helping you focus on the right opportunities.
Yeah, focus is obviously a key thing. Why do you think it's so important, right? You're mentioning focus for your customer and also focus for you as a business, right? Why is that so important for you guys right now specifically?
Yeah, I mean, look, there's been a lot of people in the talent space try and do, similar-ish things. You can go back to Hired, you can go back to, Vettery, you can go back to Welcome to the Jungle Otter. There's lots of people that have tried to do stuff in this space. And the lesson that I've learned throughout those journeys, observing them from the outside and being a customer to many of them, is that really engineering is where the value is. And those companies race to add marketing and sales and a whole bunch of other bits and pieces. But ultimately, that isn't where the value is, and it's a big distraction. And it's very easy to get very shiny numbers and say, oh, look, we've got 1 million people on, 2 million people on the platform, wherever it may be. But if only a fraction of those are actually people worth introducing or companies worth meeting, they're kind of vanity metrics in my view. So for us, it's about zeroing in on like, what's the fewest number of introductions that we can make? What's the fewest number of the best companies that we can onboard? And how can we ensure that we are the place to go if you're a top talent in whatever, industry or segment you want to be in? How can we become the destination that connects you with the right opportunities?
And then in terms of job roles, obviously, you've mentioned the only focus is software engineers. This might not even be on the roadmap, but is there a threshold where it's like, okay, now we look horizontally out into and we go outwards into different roles? Like, is that even on the roadmap?
I'm very confident we could get to 100 million in revenue just in engineers. I really just don't think. I think that if you think about how the recruitment world is structured, there are kind of 4 big buckets.
Sure.
There's technology, there's exec search, there's nursing and doctors, and then there's like by the hour staff. Those are the 4 big buckets. That's really where the markets are. There are very few scaled businesses doing marketing hiring or sales hiring. It's not really that big of a market. The demand is not there on the client side. And so for us, it's really just focusing on software engineering for now. Seeing how far we can penetrate through those top companies, both in the UK and eventually internationally, and then as and when it becomes appropriate, we would look at other verticals.
Cool. From a market perspective, right? Like, because in my mind, I think if I'm like Dex right now, you've got like upper echelon software engineers. I kind of put that in the exec search category because it's maybe 3 to 5 introductions of like high salary jobs. Very, very talented individuals, quite niche skill sets. Would you say that exec search area would be, I guess, if we look at like how the legacy industry is right now, would that be a competitor maybe? Like, how does is that the one you're disrupting?
It's an interesting one. We see our competitors really as sort of boutique technology recruitment firms. So the folks who are working with sort of the leading quant funds or the leading scale-ups or leading startups, those are the people we compete with. And it's kind of this middle ground between exec search and more traditional recruitment. I think the interesting way to think about it is that for a really good exec, there may only actually be 4 or 5 companies that make sense at any one time. But if you're an exceptional engineer in the UK right now, there are 10 to 15,000 companies that would hire you in an instant. You cannot physically go through all of that. And so, we actually are more valuable to these people because they have many options. The people that we work with, they're not short on opportunity. They're short on time and they're short on kind of understanding what is the right thing for me. And so it's our ability to cut through that noise and present them with the right things that helps us stand out.
And then in terms of the top engineers that you guys are hiring for, what is the thing that they're looking for most? Is it kind of like, do they want to be like missionary? Is it pay? What are the things that they're kind of like, gearing towards when they are looking and accepting roles?
The best teams, i.e. who do I get to work with? The most interesting problems, and then pay me what I'm worth.
Okay.
And I think that, for many of these
in that order,
salary tends to be more of a hygiene factor. It's like, this is what the market, I can command in the market. This is what I'm owed.
Fine.
Beyond that, it's more around, am I working with the best people and am I working on the most interesting problems?
Okay, interesting.
Those are the 3 things that matter.
Can we talk a bit more about the raise as well? So Notion led, we love the Notion teams, concept team as well. Huge fans, like incredible powerhouse investors on the cap table. Can you maybe break down the raise a little bit, and then also what's the plan with the money? Like, you guys, is this going to be team scaling? Is this going to be all in engineering? What's the plan?
Yeah, so Cam, the partner at Notion that led the round, was the first investor index. He was one of the first people I spoke to when I had the idea, and over lunch he was like, I'm in. And he's followed us all the way through, seen the progress we've made, and then we're absolutely delighted to have him lead the seed. I mean, we couldn't be happier about that. He's a great guy and a great team behind them. What is the money for? Engineering, go to market. We have got a plan right now that has us profitable by the end of the year. I think that what we want to be able to do is invest that money, be incredibly aggressive and scale as fast as we can. And we see it as a huge, huge market, a huge, huge opportunity, and one that we believe we can win.
That's all. And like anything in like, you know, when we talk about growth, any like crazy marketing stunts, like I feel there could be some awesome ones for like these consumer businesses, you know?
Yeah, I think that our audience is kind of tired of like hype and, you know, and sort of hype. Well, I think for us, it's about being, you know, people understanding that we're where the best opportunities are and just showing up and being diligent and doing what we say we're going to do. I think there's a lot of people out there that do a lot of talking. We prefer to sort of put our money where our mouth is and walk the talk as well.
Yeah, lock in. I love that. Mate, look, last kind of question as we come to a close. We've got about just under 2 minutes left. Long-term horizons, like 5 years, like you are, in my opinion, you're disrupting a legacy industry that I don't know why hasn't been like disrupted earlier. In my opinion, I think there are like incentive misalignments with how typical legacy agency recruitment works. What does this look like in 5 years? You know, like, is this going to be like from now on, people will just have like a DEX in their hand and this is where I go if I need to go and move my job? Like, what is not the end goal, but like if everything goes perfectly to plan, where do we end up in 5 years?
Yeah, I mean, agencies last year generated about $1 trillion in fees. So to put that in context, all of HR tech combined together, including Indeed and LinkedIn, has got a market cap of about 450 billion. So it's very clear where the value accrues in this market, and it isn't to the SaaS providers, it's to the service provider, which is why we work as a service provider.
Yeah.
I think in the future, you know, it is very logical to me that every person in the world will have an agent that works on their behalf and supports them in their career. It is a wide open space right now, and it will exist. I think that what that becomes a bit further out is a bit like a market maker for labor. Sure. You know, we've got market makers for commodities, we've got market makers for just about everything else. And yet the biggest market in the world, labor, has nothing. There are no international standards, there are no rails, it's just a complete Wild West.
Yeah.
I think in the future, you know, we see DEX as a way to kind of bring some structure to that and to reduce some of the inefficiencies of that market, because today you've got incredibly talented people the world over. And I genuinely believe that every person in the world has got talent, but most of it misdirected, most of it wasted. And so our real mission is to connect talent and opportunity globally, because we believe that's the driver of progress, that's the driver of everything.
That's sick.
Yeah.
So you have a unicorn company on your hands. Very, very cool.
A Soonicorn. Dude, thanks so much for joining us, man. It's been an absolute pleasure. Congrats on news as well. So huge. Insane backers, insane product. Like, it looks like you guys are going to crush. Thanks, welcome back anytime. Come back on when we hit this next milestone.
Cheers, guys. Have a good one.
Bye.
Cheers, Paddy. Have a good one.
To meet you.
Ciao.
Polymarket, the world's largest prediction market. Stay informed and profit from your knowledge. Go to polymarket.com.
Up next,
we have Kaushik.
We got the holy cow coming into the stream right now. How are you, sir? Let's go.
2 days.
Let's go, dude. It's so good to see you again. Welcome back to the show. We've been buzzing for this one. I'm thinking we just jump straight in, man. Like, I know we had a chat the other day. I just think we dive in there. First question, straight off the back. SovAI from your perspective of a multi-stage fund. What do we think about it? Go.
It's amazing. I'm so happy that it's happened. I wasn't involved in it at all, but I think both as someone who invests and lives in the UK, I think it's so good that this is finally happening. I can't imagine what they would have had to go through to get this done, because I think if you think about just from like outside the tech bubble perspective, in our bubble, it's very normal to use Claude to run your life. And we know that AI is the present, not the future, and all of those kinds of things. But I think if you ask an average person on the street, they're probably wondering what AI is, and they've not even used ChatGPT, let alone use agents or anything like that. So I think politically, I don't even know what kind of hoops they would have had to jump through in order to get this done, because this is clearly something that pays off super well in the long run. But the benefits of this are not going to be immediately evident. It's not something that you will see a difference tomorrow. It's going to take a while for these companies to mature, and it's going to take a while for these companies to actually succeed and create jobs, and then provide value to the economy. But it is the absolute right thing to do, because if you don't do that, you end up in the same situation as we are today, having missed the entire software wave and exporting most of the software companies and not having any value to the country from it.
Yeah.
So I think I went to the launch drinks and James amazing joke delivery in his speech, but outside of that, I think he said the same point, which kind of stuck with me, which is over the last 20 years, we've gone through a technological revolution, and we've exported the best of talent, exported the best of companies, but none of that value has actually come back to the country. So 10 years hence, when you're looking back, you want to then look at SolveAI and say that was something that helped keep some of the value within the country. From a multi-stage fund perspective, I think that they have a very unique angle and where they can be everyone's friend, and it will be in everybody's interest to allow them to be a part of the best companies.
Sure.
There is the obvious commercial lens of having access to the government and the government being a customer and things like that. But I think beyond that, even I think the founders building here would be quite happy to, it's a little bit like giving back, but you're getting money for it and like getting capital.
I didn't actually think about that perspective. That's so interesting.
Yeah. So I think if I was a founder, I would definitely be quite keen,
100%.
To get SolveAI. And I think as responsible investors, I think if there was space in the round, or if you could make space in the round, I think it would be pretty good to have SolveAI. It's a little bit like making sure you give back to the community and the country that's providing you access to these opportunities and providing all the infrastructure and opportunities for building these companies. And they're a pure equity investor, so they're like a VC investor. It's not like a weird grant setup or doesn't come with anything that is non-standard. So there's really no reason why you can't make a little bit of space for them.
Yeah,
100%.
That's an awesome take, and those guys are killing it. We've been following the story. I had James on when they announced it, and his speech looked really great. In a comparison, sorry, go.
I have to say though that I hope that the next iteration of this has an extra zero, because I think it's a really good start. But I hope the next iteration has an extra zero at the end.
I mean, I'm not sure if it's bad that when I saw the 500 million, I was like, oh, I'm actually like really. Like, I was surprised it was that high. I mean, obviously globally talking, like, yes, maybe, it needs to be higher. And I think it probably will now that these sovereignty conversations are becoming more...
I assume, in a few years, maybe a year, whatever, like they'll raise another fund kind of thing. Is that how it will work? I assume it's just going to operate like
I guess. I mean, I think it would be a little bit like a fund one for any fund manager. I'm purely speculating here, but I think they will have access to the best of companies, hopefully, if the rest of the ecosystem thinks the same way. So which means that if they end up with a couple of breakouts in their fund one, I think they have a good case to go back to the government and say, this is actually really good use of taxpayer money. Look at what we've done. And that enables them to raise more money.
Yeah. Do you think they're? Do you think they are potentially being looked at by the government in terms of like a return on capital? And do you think? I mean, obviously they are, but do you think that they have a what's the word, like their
KPIs?
Yeah. Do you reckon there are like kind of strong KPIs to be like, oh, you have to kind of get to this stage at this time, kind of thing? Do you think there are like that?
What I took away from the event, at least, was that it's not. It is exactly the same as any other VC fund, which would mean that like it's not charity. It's not like here's money, and if you donate a higher hurdle, it's fine. I don't think it's that. I think they're looking, at least the way they're operating, and they shared some of the stories of how quickly they're able to do deals, and how they're hustling for deals, which is very similar to how I would live my day to day. It seems exactly like another VC fund, except, like I said, I think there's this giving back element to it, right? If you take money from them, I think it's good to give back. They don't have to lead around, so it's pretty good that you can bring them in, and it's good to have them. So my guess, purely speculating, is that I think they have KPIs and they probably have an IRR hurdle, and but I think because they can access pretty much everything theoretically. And they can get into pretty much anything theoretically. they should be able to deliver a market-beating IRR.
Yeah, I agree.
Connected to this in some way, but just talks about Europe in general. There's been a load of comparisons on the timeline recently. It seems to be like an ongoing narrative. But this European versus US comparison, you kind of say it's the wrong framing. Would love to. Can you educate us a bit more about your perspective on this?
Yeah, I think I spend an inordinate amount of time on X. And I get really annoyed when as someone who lives and invests in this ecosystem, I get really annoyed when I see these comparisons, right? Also having worked in value companies before, I think let's go back 5 years, right? 2020, 2021. Stripe is valued at 98 billion. It is the highest valued private company in the Western world. The only other one was ByteDance, I think at 150, if I remember correctly.
Yeah.
And and at that time, they were like, oh, what does Europe have? Europe has nothing. There was Revolut at around 5-7 billion, something like that. And then there was Spotify, which has been around and has kind of been the outlier for a long time. That's about it. Now, cut to 5 years later, you have the world leading TTS model is European, right, which is 11 Labs. If you think of vibe coding, leader is Lovable, which is European. If you think of legal, there is a very credible European competitor to the American counterpart. If you think of contact center, we're investors in Parloa. That's a very credible competitor to Sierra.
Yeah.
So these are large multi-billion categories where you now have, I could just name 5 from memory that are multi-billion dollar companies. And if I told you this in 2020, you would say I was delusional, right? And yet today, this is a fact. And all of this happened while there is a significant amount of macro gloom and doom, and a lot of people still making fun on X of Europeans taking 2-month vacation, and then the compliance VC guy, all of this still kind of persisted.
Yeah.
But also this happened. And I think so. The point I think the framing of America is so far ahead, and are we even comparing? Is I don't feel it's necessarily fair because America is far ahead. I don't think there's a question of that. I think they've been at it since the 80s and 90s, and since Sun Microsystems. I mean, if you think of just the number of vintages they've had, if you think of this in wine terms, I think they've had a vintage since 1980. And Europe is a relatively new wine producer in this analogy. So I think you've had
but some in Microsystems. Wine, we're killing it.
In wine, yes, exactly. But I think in technology, it's new, right? I think if you think of the US, you think of Sun, and then you think of Vinod Costa coming out of that, and then starting his own fund, going to Kleiner, and then starting his own fund, and then that fund becoming successful. You're looking at 3-4 vintages. I think in Europe, you're probably at step number 2 of that. So of course, it's behind, but I think it's catching up quite quickly. And it is almost in a different way is producing, is punching way above its weight for what the ecosystem is and what the maturity is.
Yeah.
So I think it's not about a head-to-head comparison saying, this is what the US produces, what has Europe produced. It is, I think Europe is doing its own thing, and it is doing it exceptionally well in places where people had not even thought 5 years ago it could do that. And I think that is only going to accelerate in the future, as long as a lot of these initiatives continue, and as long as a lot of this vibe shift continues. And then I think you probably know this better than I do. I think there's just a whole vibe shift, and there's just this whole there was this vibes problem 5 years ago where you automatically assumed that you were the Alpha Tauri and the US was the Red Bull. And now you're saying, hey, hang on a minute, I'm probably McLaren, and I'm going to try, right? And I think that's good. That's good, right? And so I think that vibe shift has happened. So I think I'm quite optimistic. I'm actually really optimistic. I think you see that now, and you see it obviously with a lot of the announcements now coming out about the new European labs.
Sure.
But also on the application layer, I think you see companies that are just competing at the same level, that have founders at the same level. You have founders coming back. You also have founders that have seen best in class, who've come out of Revoluts of the world and the Stripes and all of these companies.
Yeah,
Sure.
absolutely. We have 2 minutes left, so I just want to make sure we cover this one because I really want to get your take. But the OpenAI and Microsoft partnership announced that it was kind of loosening its ties. There's still some sort of connection in terms of a rev share there till 2030. But what's your take on this? Is this going to affect things massively? It's quite interesting with obviously the IPOs coming up, but yeah, what's your thesis?
My speculation is that I think it's basically prepping for the IPO. It feels like going from like a messed up marriage to a situationship.
Nice.
Right? Like
The analogies, man, it's just coming out with it.
Today's analogy day. But if you think of like the earlier contract, I was reading up on it, there was like this compute lock-in, there was this rev share, there was this weird structure of the for-profit company and a rev share from the for-profit company. Whereas now it looks like the compute agreement seems to be unbound. I think there's just an equity stake, and then I think there is a spend lock-in, which is really nice and it's quite clean. And I think it makes sense. It just feels super clean to me, just as a outside commentator or someone who's up to date on this. I think it feels like it's happening in prep of the IPO, because the former would just be so difficult to unravel and value. The latter is quite easy to value. Like you just have an equity stake and you have a guaranteed spend. And it's just very easy to account for on both sides.
If I'm like a rival cloud provider, am I like really excited now? Like I saw Andy Jassy had done a tweet saying that like some of the, the like I know Amazon OpenAI relationship is being established. I can't remember what the specifics of it were, but what does this mean for the other cloud providers, right? Like,
yeah, I mean, for the others, I mean, it feels like it's completely open, which anyway happened with Stargate, right? I think it feels like now you can access and you can sell to OpenAI. But it also feels like the playing field is level, because now the OpenAI Microsoft agreement looks quite similar to the Amazon Anthropic agreement, where there is an equity stake and there is a minimum spend. So I think it feels like a more level playing field. And I think if I'm one of the other clouds, I'm quite excited about it.
Yeah,
sure.
Dude, we would just love to have you back on every week. We are at time, but it was great to chat with you as always. And we'll do this again very soon.
Great pleasure being back on, and talk to you soon. Enjoy the sun.
Thank you very much.
Have a good one, man.
Good stuff.
Always good to chat.
Ciao. Framer, build better sites faster. Go to framer.com/ETN.
Okay,
Last guest on the show.
Before we intro this last guest, we just need to take a moment, because this is now the collection of all of the Legora Infinity Stones. We are turning into Thanos live. We've got Patrick coming into the studio as we speak. Can you hear us, Patrick?
Yes, I can. How are you guys doing?
We're doing good, man. We're doing a lot better now you're here. It's great to have you. It's good to have you on the show. This has been a long time coming. We've been really excited about this one.
No, I've been really looking forward to it. Thanks for having me. It's good to be here today.
It's great. We've got so much to dig into. I think the first one that we just kind of have to start with, because the timeline went crazy about it, is the Jude Law ad. This thing was so funny. What was the thinking here? Like, how did you guys make this happen? We literally saw one of the ads yesterday in Shoreditch. We're seeing it everywhere, but yeah.
Yeah, definitely made a big splash. Just for context, like if you zoom out, like when I started in the business at the beginning of last year, I was building out our US team and our presence here. And, we have this amazing product, this amazing team. The only problem that we had was, not everyone knew about us, right? So when we have the opportunity to get into a pilot, we convert those pilots into customers at an extremely high clip. But there was rooms and conversations happening that we just simply weren't in. So we're always trying to think of creative ways to get our brand out there, to have people know sort of who we are. Fast forward, shout out to Stuart, who leads our marketing team. He worked with an agency to come up with a bunch of creative ideas on like how we would do a big splashy brand campaign. Jude Law was one of the ideas that they sort of gave Stuart and the team. So it was a very sort of hush hush thing on our side. It was called Project Alfie internally. Only a couple people knew about it. It was very top secret until go live date. And then obviously, it made a big impact. And my phone's been blowing up with people I haven't talked to in a million years, reaching out to me about it. So I think it had the, in terms of getting our brand out there, it had the desired effect.
Yeah,
for
I
sure.
assume everything else is like locked down, but you can't give us any other like what were the other like things that you could have done? Were there?
Yeah, how
can you say
crazy?
the
How
other
crazy were
options?
you guys getting?
Yeah,
I mean, I don't know. Jude Law is pretty crazy. Like
that's pretty crazy.
That was on the upper end of craziness in terms of
Right.
ideas that we had. So you never, I mean, with Max, you never know. Like, he can always come up with something a little crazier, but I think that was on the high end for sure.
I love it.
Definitely true. So cool. I mean, let's talk about. So you are CRO of Legora, intertwined into the whole GTM and sales functions. First question.
That's a nuts role.
It must be an insane role for the pace at which you guys are growing, and it's kind of linked to this question. How because I used to be in an enterprise sales team when I was at Pigment a few years ago. That was like 3 years ago, maybe now. And I assume things have changed in the advent of AI. Like, how do you go about structuring like a large growing sales team in 2026 with AI? Like, how do you do that today?
Yeah, I mean, it's a great question, and it is like super nuanced and very different than how I did things when I was working in SaaS. To your point. And the other challenge that we have is, when I started beginning of last year, we had 40 people, and now we're at 500 people, and we're much bigger. And we're much bigger. Well over 100 million ARR, right? So it's just the way that you operate at 10 million, 50 million, 100 million sort of evolves. So the first thing is we have to get people to buy in that the only constant here at Legora is going to be change. And so the way we do things today is very different than how we did things last summer. It'll be very different how we do things, this upcoming summer. But in general, we have three sort of primary teams. We have go-to-market, which is our sales function, and we're having a lot of success bringing in folks from a pretty diverse set of backgrounds: lawyers, consultants, and big tech folks who are used to selling complex, nuanced, and like enterprise solutions. And then a unique role to Legora is, and I think where we're doing some of the most exciting work in tech today, is our legal engineers. So we hire these incredibly smart, hardworking attorneys from typically big law or big corporate legal departments who are AI forward. And their job is to really have a deep level of subject matter expertise around how legal work gets done in those contexts today, and then mapping that to like agentic workflows in Legora, doing process design, process redesign. And that's where the real hard yards in terms of implementation, change management, multi-year transformation really happens. And then we have a post-sale team, our engagement managers, really obsessed about adoption, delivering value to our clients. So we have sort of those three teams, and they work in concert together at different stages of the buyer journey.
Yeah. Is that is that a thing that's kind of happening like across the board in terms of these kind of really quickly scaling companies? That's how they're being structured in terms of like their GTM function, all that kind of stuff. You're getting subject matter experts who are AI forward, and you've kind of got two sides of the coin working directly within your company. Is that how these things are structured now?
Yeah, 100%. And I talked to a lot of other vertical, go-to-market leaders who are doing, in roles sort of similar to mine. And there's this old consulting adage, right? That the two things that people hate the most are the way things are and change, right? Yeah. And so in order to deliver like really meaningful change in a big company or a big law firm, you have to have a deep level of subject matter expertise, because it doesn't matter what the technology is. If the people process sort of elements around the technology don't change in a meaningful way, then it doesn't matter what you're selling or what solution you're implementing, it's not going to be successful, right? And so you have to take like the hard yards and like get into the trenches. And we take a lot of pride, like being in person, working very collaboratively with our customers to deliver sort of bespoke workflows and use cases with our clients and make a big impact. And that's where we're probably having the most fun.
That's awesome. More specific around maybe your role, and I mean, I'm making assumptions here, but like I'm assuming that you might talk to a lot of other CROs maybe in the across like maybe SaaS or like this new era that we're in right now, and I don't know, share thoughts or whatnot. Is there a change in how CROs are thinking today? Like I feel that like ARR, like time to certain milestones has got shorter. The speed at which you're kind of hitting them is getting shorter. I feel like it's very different expectations for a CRO of, a SaaS company in 2010 compared to a SaaS company now. Like, are there conversations that you're having with CROs about these things that are changing? Like, how are things changing today for the CRO? Role?
Yeah, there's a ton of that going on. And the great thing about being here in New York is that there's so many, great companies and other folks sort of doing this type of work. And I think there's a couple of things, and you already called it out. I think the speed at which things are happening is materially different than in like previous eras that I've at least worked in. And so that's both from the product side, like the Legora product today versus when I started a year ago is like dramatically better and does way more and cooler stuff as the sort of models and architecture around the agents has gotten dramatically improved. But then also the competitive dynamics, the landscape, everything is evolving so quickly. And we're also, using AI really aggressively internally. We're an AI native, like go-to-market team. We use all these different tools to facilitate sort of like automation in every phase of our process, like how we do prep, how we do follow-up, how we do like different sort of content creation. We're using a number of different tools and like ways in which you can do like ramp measurement, ways in which you can measure, client delivery and ROI. All that stuff is really impacted by the AI tools that we're using as well. So, ramp timelines, productivity per head, cross-functional collaboration is all materially different than it used to be. But honestly, like putting these sort of changes in place and trying all these new tools on our own sort of systems is a lot of fun. And it's been sort of really piqued my sort of intellectual curiosity in a big way. So I'm having a blast.
Yeah. Let's keep going down the kind of speed route, right? Where all of you guys in the kind of C-suite, you guys are all kind of moving at 1 million miles an hour, and you just mentioned it, where it's like change is the only constant. How do you guys, what is the function of the C-suite in terms of like making sure you guys are on the right direction in terms of where the ship is moving?
Well, I think the best thing we have going for us on the C-suite, obviously, is like we have an amazing founder and leader in Max, and every one of us that's joined the company has joined because we believe in him and we believe in his vision. So he sets the tone and leads from the front in terms of speed, in terms of work quality, and in terms of delivering for our customers. And we're really aligned around this intention of being customer obsessed. So if you don't have sort of aligned intent at a leadership level in terms of a North Star of like delivering meaningful change for your customers, then it doesn't matter who's doing what, like you're not going to deliver the results that you want. So, Max leads from the front, and then the rest of us, our job is to go sort of carry the torch, and we have really clear swim lanes in terms of roles and responsibilities, who's doing what, how we all work together, and really focus on delivering those outcomes for our clients. But it helps when you I always joke, like Max is an alien sent from the future to sell agentic AI, and we're definitely lucky to have him.
That's so good. Within this as well, I guess it's your background. You've been in this function before. Like you've been in the enterprise sales function for a while, right? Like maybe you're well poised to answer. How are you like building a solid like sales culture internally at these places? And then connected to that as well, and maybe just a selfish one from me personally, because I used to have to do this all the time, but are people still cold calling now, or is that not a thing anymore? Or like this is still happening? Or
people definitely still cold call.
Let's go. It's good to know that's not gone.
It's definitely, it's definitely a rite of passage. I cold called, it's still all these years, back in 2008, when I was a BDR in 2008, it was not a good time to be cold calling. I can tell you. It was a tough entry into
in the trenches, bro.
Years, surely. But yeah, I mean, but yeah, the culture, similar to the conversation around the leadership team and Max, like I try and lead from the front and set the tone. And I think the biggest thing is just about being transparent around expectations. I think where people sort of, when I talk to folks, and I've been a rep, I've been a first line, second line leader, I've done all the sort of jobs. And so I think the biggest thing that I can do is have really clear standards of like, here's what I expect from my leaders, here's what I expect from the team, here's who's doing what, and this is how we're measuring that. I think if you're really transparent and clear about keeping like, this is what we expect and this is how we do things, then that just gives you the ability to focus on the fun stuff, which is like, let's go execute, let's go get in the field. Like I'm meeting customers every day, I'm with our team, I'm giving feedback. And we also really need to embrace this concept of just like growth mindset and constant state of improvement. Like the company, like I said, we've gone through these various iterations and growth stages really quickly, but so have the individuals on our team. And like one of the things that I take a lot of pride in is if you're not better 12 months from now, after you've worked within our team, then like we screwed something up, right?
Yeah.
And we take a lot of pride. If you come work here at Legora, we want you to do the highest and best work you've ever done, but we also want you to get, better situated to take that next step of your career, whether that's here or somewhere else, candidly, of like, if we can deliver that, set really clear goals, help you achieve those in a big way and go outperform and out-deliver, then we'll build a culture where people have a high degree of trust and a high degree of agency to go, put up big numbers.
Yeah.
And before we let you go, I just want to quickly talk about the news and what it means to kind of bring, Atlassian, NVIDIA's venture capital arm on board. What does that mean for Legora kind of moving forward?
Well, I think it's just another sort of stamp of approval that, we're solving a really big problem with some of the biggest companies in the world, and we're delivering results in a really meaningful and impactful way. And obviously you go bring on investors like that, without an extreme amount of diligence, without extreme amount of market analysis about the team, the product, and the competitive landscape. So it's always good to have that sort of cosign, behind us. They've been great to work with so far, as if all of our investors have been really leaning in to help us win in different ways. So, just another sort of validation point for us in the market. And we're super thrilled to have both of them on board as investors, and really look forward to working more closely with them.
Yeah, let's go, dude. Fucking always love to speak to the Legora team. You guys are crushing. It's an open seat for all you guys whenever you want to come back. And we're rooting for you. Not that you need it.
We do. We really appreciate you guys' support. Come to New York, come say what's up, and I'd love to see you guys in person at some point. But thanks for the time, and thanks for having me.
Awesome,
appreciate
man.
it. We'll do some cold calls when we're in New York.
Yeah, we can hit the phones together, man.
Yeah, I'll bring some leads over. I'll give you guys, Ronan, I'll let you rip on some cold calls, and we'll
for old time's sake.
Just give me a script, man, and I'll man. All good.
I got you. All right, thanks,
stuff, dude.
Cheers, dude. Have a good one.
Ciao. That is the show, ladies and gentlemen. Leave outdated business banking behind with Airwallex. Go to airwallex.com. We will see you next week on Tuesday.